Ladies and gentlemen, boys and girls. Dude, I dig it. I think our audio's rocking. Good morning. Good morning. Oh my goodness gracious. It's game time, baby. Come on, Winnie the Pooh. Chill out. All right, Piglet. Good morning. If you're new here, my name is Wetis Willius. We go live all the time. We learn how to buy assets that cash flow. We're going to get into it today. We got a lot of ground to cover and not much time to do it, so I'm going to cover as much as I can. But good morning to you. Oh my gosh. Ladies and gentlemen, boys and girls from all around the world. No, we can't get Michael Buffer. I think he protects that pretty well. Good morning. If you're new here, my name is Will. We go live all the time. We learn how to buy assets that cash flow. If you want to hang out with us, good morning. It's good to see you. We cover a lot of ground. We learn how to buy assets that produce profit and how to get financially free without waiting until you're 103. We talk about that all the time. So good morning. We're going to cover some ground on this today and walk through many different subjects and topics, from assumable mortgages to foreclosures, storage units, all this stuff. So without further delay, let's get into it. Great morning. What's up, Rom? Good morning, sunshine. Good to see you. So if you're new here, good morning. My name is Will. We go live all the time. We learn how to buy assets that cash flow. I'm going to walk you through the basics of it, and then we'll get a little bit more advanced and more advanced as we go along. But good morning. Here's the basics of this stuff. You take your active income. The principles do not change. The principles of wealth are the same, and you just repeat them over and over and over again. So you take your active income. This is money that you earn from your job or your business. You take your active income, you stage and stash that cash. You get that cash ready until you find an asset that produces profit. So you take your cash, you stack it. There's a framework I'll teach you in a minute: safety, liquidity, rate of return, taxation, fees. That helps you evaluate where you're going to save and invest your money. So you take your cash, you stash your cash, you focus your attention on assets that produce profit. You're going to evaluate these things. This can be a rental property. It can be a multifamily complex. It can be an apartment, a self-storage facility, a laundromat. Whatever you're into, we're going to evaluate those assets. So we take our cash, we get it ready to go out there and stack it. Then we evaluate assets. An asset, by definition, is something that produces income that doesn't require your time. So when we find an asset that produces profit that we're happy with, we then use the money we've been stacking to go out there and buy assets that produce profit. Rinse, wash, repeat until you're financially free. JB, good morning, sunshine. Are Powerball tickets considered an investment? The old phrase from some guy in France was something like, playing the lottery is a tax on those bad at math. So, to each his own, my friend. The fastest way to lose all your money is gambling. The second fastest way to lose all your money is day trading. Good morning. If you're new here, what's up? Good to see you. We buy assets that cash flow, baby. An asset produces profit. Good morning, Orlando. Good morning. If you're new here, let me know in the comments where you're tuning in from. What part of the world are you in? My name is Will. I'm in Austin, Texas. Let me know where you're tuning in from. Good morning. We're going to get into some assets here in a minute, and I'll show you how we find them wherever you're at, no matter where you're at. Ready for today's money motivation? Let's go. Let's go. Me too. So we buy assets that cash flow, and we rinse, wash, repeat until you're financially free. So let me walk you over here, and let me show you how we play this game a little bit differently and how you can retire without waiting until you expire. It's not rocket surgery. It's not complicated, but this is how you play the game. Good morning. If you're new here, my name is Will. If you want to hang out with us every day, come up here and tap on the follow button. I go live and I teach for free. What do I teach? How I got financially free at age 29. I didn't read a book last night and tell you what I read. This is what I did with my life. So if you want to hang out with us for free, just come up here and tap on the follow button. Let me teach you, though, really quick, what we play. The game is that we buy assets. Everybody in the chat, type A. Type A in the comments. We want to define what these words mean. Whether you agree or disagree, I want you to understand. So just type A in the chat. A. A. Orlando. A. L. A. J. A. BTZ. Good morning. So A represents asset. An asset, by definition, is something that produces income that doesn't require our time. If you can disconnect time from money, you can get financially free. Brayans, what's up, baby? You can disconnect your time from money, you can get financially free. So we buy assets. An asset, by definition, is something that produces passive income. The income is produced by the asset, not by me. I don't have to be there to have a rental property. I don't provide the shelter. I don't hold the umbrella. The rental property provides the shelter. If I have a self-storage facility, they don't store it in my garage. I have a separate garage that they can rent, and they can store their stuff there. That's the principle. The asset provides the value, therefore it produces the income, not me. That's called passive income. Assets that produce passive income. Passive income, when greater than or equal to your expenses, you're financially free. So if my personal living expenses, hypothetically, are $5,000 a month, and I buy an asset, let's say a rental property or a self-storage or a laundromat or a car wash or whatever you're into, and that asset, say, gives me $1,000 a month in profit, in the chat, let me know, how many assets do I need until I cover all of my expenses? Let me know in the comments. If I have an asset that gives me $1,000 a month in profit, and my personal living expenses are $5,000 a month, how many assets do I need until I'm completely financially free? Let me know in the comments. And then we will fill in the blank. What is the answer? Five assets. Assets that produce passive income when greater than or equal to your expenses, you're financially free. Answer, do we stop at 5 assets? Yes or no? Yes or no? Do we stop at 5? When you get to 5, do you stop? No. August, good morning. No. You figured out the game. Now you keep playing the game. So 5 assets is what gets you to break even. The assets produce enough income to cover your expenses. So hear me on this. If you're new here, pay attention. Instead of asking yourself the question, how many years until I can retire, we ask ourselves the question, how many assets must I acquire? That's the name of the game. Good morning. If you're new here, my name is Will. We go live all the time. If you want to hang out with us every day, come up here and tap on the follow button. I go live all the time and I teach my face off. I teach you what I did. There's no theory here. I didn't read a book and tell you what I read. I tell you what I did with my life. Good morning. It's semi-passive. Depends on the asset that you buy, so make sure you buy assets that are fully passive. Good morning. If you're new here, it's nice to see you. We learn how to buy assets that cash flow, maximize tax savings, and everything in between. Good morning. The hard part is make your first asset work. That is what's holding me back, Mr. Myers. Good morning. Ram, what assets are you looking at? Remind me of my history teacher. What's up, Kelly? Dude, sounds like a handsome guy. Good morning. Good morning. Let me know in the chat. Ram, what in the comments, what asset are you interested in? Everybody, let me know. Are you interested in real estate? Type R. Are you interested in self-storage? Type S. Are you interested in learning how to find foreclosures? Type F. Where to find the assets? Great question. Multifamily. Type MF. MF. Real estate, self-storage. You want to look at laundromats or car washes? Type L for laundromat. C for car washes. If I get time, we can get to RV parks. I've got some RV parks on the docket. I just don't know if I'm going to be able to get to it. Self-storage. Okay, we'll evaluate some of this today. Let's get this on our agenda. So let's get foreclosures up there. Let's get self-storage up there. We'll get real estate in the chat, multifamily, car washes. Okay, if I get a time, we'll get to car washes a little bit. Okay, let's go evaluate a deal live right now. So if you're new here, by the way, my name is Will. I go live all the time and I teach for free. I've got a free class. It's our back to school class. If you want to learn how to buy assets that produce profit, I've got a free class I'm teaching Saturday, August 8th. So not this coming Saturday, but the Saturday after that. If you want to be in the class, it's completely free. It's at 9 a.m. Central Time, 10 a.m. Eastern. If you want to be there, just tap on this guy. It should be down in the bottom corner. And when it pops up, somewhere down there, it should say register for the free class or something like that. So go tap on that. Once you get registered, come back in the comments and say done. We're going to jump over here. So when you register, we pop over here. Yeah, right here. Look at the bottom. It says class, how to get assets, August 8th. So go register there. The class is free. Oh, you can't even see it. Go register for the class. So you just tap on this guy somewhere down there. Boop. And then it says class, how to get assets. So if you want to register for that class, go do it now. The class is free. It's Saturday, August 8th at 9 a.m. I'm going to get into some assets live right now. But in that class, I'm going to teach you several things. Number one, how do I find assets? How many of you want to learn how to find the assets? Type 1 for yes. Done. Let's go, Rom. I'll see you there. Saturday, August 8th, 9 a.m. Central Time. The class is free. Where do I find assets? That's the first thing. Number two, when I find them, what do I do with them? So I find a deal, $61,000. How do I evaluate it? I'm going to teach you that on Saturday, August 8th at 9 a.m. Central Time, 10 a.m. Eastern. And then number three, this is probably the most important part, so make sure you stick to the end of the class on Saturday. What do I do if I'm scared? What if I have fear? Registered, let's go, Rob. The class is free, so keep an eye on your email for registration stuff. What What if I'm scared? What if I'm overwhelmed? What if I'm uncertain? What if I don't want to make a mistake? What if I'm worried I'll lose all my money? What if I've never done this before? What if? I'm going to teach you how we take fake AI assets and we take fake money and we buy the AI generated assets. So you can practice the skills of buying deals over and over and over again without any risk. Does that sound valuable to you? Type 1 for yes. How many of you are like, boo, that's terrible? Type 2. Does that sound valuable? You can take fake money and you can buy fake AI generated assets. So you can practice the game over and over and over and over again. Because fear, overwhelm, uncertainty, all of that stuff is what stops people. So if you want to be in the class, that class where I'm going to teach you how to do all those things is in here. Just tap on this guy. It's down in the corner. Go register, but let's get to a deal. So it's somewhere in the corner. Advice on assets focused on supply-dense service product. Give me some examples of what you're talking about. I think I know what you're saying, but I'm in. Let's go, August. I'll see you Saturday. So if you didn't get a chance to register, the class is free, Saturday, August 8th. But let's get into this. Let's take a look at this deal. So this is a $61,000 asset. $61,000. This is a piece of junk because it's so beat up, so run down. It's going to need some work on it. One of the things that we're going to learn right now is strategy. Everybody type S in the chat so we're focused on the same thing. I'm going to teach you on real estate, but I don't want you to get sucked into the real estate that you miss the overall idea. Strategy. 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 We're going to learn strategy in real estate. Then once we pull the principles out of strategy, we're going to go apply it to a different asset class, like in commercial. I'm going to show you how we do it live right now. The strategy we're going to learn is the BRRRR method. BRRRR. What does this mean? BRRRR. Everybody type BRRRR. BRRRR. Laundromat can be good. BRRRR. Buy a piece of junk. Rehab it. Because it's a piece of junk, I need to fix it up. That's what the R stands for. Buy rehab. After I rehab it, it looks nice on the inside. So then I put a renter in it. Buy, rehab, rent. After I get a renter in there, I call my bank and I say, I want to refinance. I want to take my profit out of the deal. Buy, rehab, rent, refinance, repeat. So the strategy is BRRRR. Everybody type BRRRR. Or give me the cold emoji in the comments. BRRRR. So we find this piece of junk. It's $61,000. Let's go, piece of junk. The junkier, the POJ, the better. Because I'm going to lift it up. I'm going to improve it. I'm going to put some work into it. I'm going to increase the value of this thing. So $61,000 is what I buy it for. Let's look at the numbers. This is the inside. It's a piece of junk. I already told you that. Let's look at the asking price, $61,000. I take a little bit of money out of my pocket. Everybody type DP in the chat. DP. This is what I take out of my pocket. This is my DP. And I slap my DP down on the board. How do I find these in California? Heather, I'm going to teach you how to search these in just a second. DP. This is my DP. So this is my down payment. Out of my pocket, my down payment is $12,000. 12,000 buckaroos. 12,000. Yeah, flap it down. Then I've got to reach into my pocket again for repair expenses. So I've got my down payment, 12 grand, and $30,000 in repairs. So I've got more money. Good money. I can't wait 7 years, sir. If you can't wait 7 years, well then just wait 10. I'm going to teach you how we get financially free sooner, but if it's been taking you 50 years, maybe the first thing you need to learn is patience. Good morning! Good morning, sunshine! Yo! So $30,000 is my repair cost. That means out of my pocket, good morning, Joy, $42,000 comes out of my pocket. Good morning, Jeffrey! What's up, West Virginia? Good morning, sunshine. Justified Ventures in the house. So 42 grand comes out of my pocket for down payment and repair cost. Then I fix it up, I clean it up, I make it look nice. I call my lender. I say, hey, Mr. Lenderman, can you send an appraiser out here to reevaluate the value of my property? They say, sure. This is called ARV. Everybody in the comments, type ARV. Often when we learn a new asset, there's new terminology. We get intimidated and scared. Don't be intimidated and scared, it's just words. Everybody type ARV. Rosanna, good morning, Massachusetts. Good morning. ARV stands for after repair value. What does that mean? Well, after I repair it, there's a new higher value. Oh, ARV, after repair value. The appraiser comes out, he says, this bad boy is worth $160,000. Cool. I call my lender back up and I say, hey, I got an appraisal. It's 160 grand. How much will you give me? Now, they call this LTV, loan to value. Loan to value, LTV, loan to value. He says, I'll give you an 80% loan to value. So he gives me a new loan of $128,000. Awesome. The very first thing they do, I've got a new value. and I've got a new loan. The very first thing they do with my new loan is pay off my old loan. Sometimes we lose people here, so everybody type B in the chat for bye-bye. The first loan, that $49,000 loan, bye-bye. Everybody type B. This gets paid off, so it's gone. They issue the new loan of $128,000. They pay off the old loan, 49 grand. When I first bought the piece of junk before I fixed it up. 128 is my new loan minus 49,000 of my old loan. My net cash out is $78,000. They direct deposit to my bank account 78 grand. What? Yes, that's how it works. What? That's what I'm saying. Here's my first question to you. If I got a loan and the direct deposit is $78,000 after they pay off my old loan, yes or no? Type Y for yes, type N for no. Is this taxed? Y for yes, N for no. Where did it come from? A loan. Against what? My asset. Is it taxed? Yes or no? Good morning, Paula. Speaking of Massachusetts. Joshua, no, it's debt. Do they tax debt in the United States? Yes or no? No. Because this is proceeds from a loan. I got a new loan. $128,000. Good morning, Handy. Good morning. They paid off my old loan. The difference is a direct deposit into my bank, HIP National Bank, $78,000. Because it's proceeds from a loan, it is not taxed. Oh, what? Then I recoup my down payment and repair cost, $42,000. Down payment and $30,000 in repairs. I get that back into my pocket. That means my profit on this transaction is $35,000. What? That's not considered in a capital gain. I didn't sell anything. Where would my capital gain event come from if I didn't sell something? I still own the house. I refinanced against the equity. I get a $35,000 profit. What would I be taxed on? Great question, Tony. Everybody with me on this? This is profit. What about the loan? Okay, how many of you are like, wait a minute. That's not, great question, Tony. That's not profit. You borrowed the money, you knucklehead. Everybody type L in the chat for loan. We'll address this if you want to talk about it. Is it really profit if you borrowed it? Type L in the chat for loan. Didn't you spend that in repair? This is my repair cost, 30 grand. Let's go back. Great question. $30,000 in repairs, $12,000 in down payment for the first loan. When I bought the piece of junk for 61 grand, I put $12,000 down out of my pocket. Repairs out of my pocket. Total, oop, there it is, out of pocket, 42 grand. I recouped it. They direct deposited $78,000 into my bank. $42,000 is recouping my down payment and repair cost, meaning my net profit, great question, is $35,000. But is it really profit if you borrow it? We're going to answer that next. If you're new here, my name is Will. I go live all the time, and I teach you what I did to get financially free at 29. If you want to hang out with us every day, come up here and tap on the follow button. We teach people how to get financially free on average in 7 years or less. Jeffrey, who's in the chat in West Virginia, did it in 4 years, from April 2022 to June-ish of 2026. Mernin Jason, Mernin. And then he just signed a contract, $900 a month on one of his parking lots. What? Jeffrey is crushing it, crushing it. So if you want to hang out with us every day, come up there and tap on the follow button. If you didn't get a chance to register, I've got a free class. It's our back to school class. How many of you want to learn how to buy assets that produce profit? Say me in the chat. How many of you want to learn how to buy assets that produce profit? Number one, how do I find them? Number two, when I find them, how do I evaluate them? And number three, what if I'm scared? I'll show you. Okay, here's what we're going to do. Saturday, August 8th at 9 a.m. Central Time, 10 a.m. Eastern. It's free. If you want to register for that class, just tap on this guy. Come down here and tap on it. Handy, I got you in a second. Just come down here and tap on this. It'll pop up. When it pops up, it'll say class, and you can register. Let me show you really quick, and then we'll get to it. When you're in the TikTok Live, tap on this guy. And you see where it says class right there at the bottom? Just tap class, how to get assets August 8th. And you can register for free. On the next page, once you register, make sure you add it to your calendar, and that'll give you the Zoom link, all the registration stuff. Cool? So go get registered now. I'm going to pivot over here. We're going to talk about, is the loan actually profit? We're going to go through all of that stuff. But to register, go down here for the class. Tap on this. The class is free. Tap on that. Evaluation process is my concern. Love you. And in that class, let's come over here. In that class, we're going to learn three things. Number one, how do I find assets? When I find it, number 2, how do I evaluate it to make sure it produces profit? What is the process and procedure that I go through to evaluate every deal to make sure it produces profit on paper before I spend my paper? I got you. And then number 3, what if I'm fearful? What if I'm scared? What if I'm overwhelmed? What if I've never done this before? What if I'm uncertain? What if I don't want to lose all my money? What if? I teach you how we take fake money, it's not real, and we buy fake AI-generated assets, also not real. So you can practice the exact sequence of evaluation over and over and over again without risk. We're going to learn that Saturday, August 8th. What? So I recommend that you're there. I don't teach this class very often, so go get registered. Saturday, August 8th, it's down at the bottom, somewhere down there, and I teach you how to eliminate risk so you can practice and practice and practice and practice, which is exposure therapy. Really quick pop quiz. If you're scared of something, you need to be exposed to it more. Just run scared. I was scared with every machine I bought, every car, every property. Let's go. Let's go, Jeffrey. 100%. You're going to be afraid. One of the ways that I help you get unafraid, let me pin Jeffrey. Jeffrey's the guy that got financially free in 4 years. August 2022 is when we started hanging out, and he's a madman. He just proceeds with fear and just does it anyway. To June-ish of 2026 is when he was financially free, just from buying assets. So 4 years. I teach you how to do it in 7 years or less. Jeffrey, because he's a maniacal maniac, got after it and did it faster. But let's get into this. Is that loan really profit? Is that loan really profit? Fiat currency isn't real money either. None of it's real, so don't be afraid of it. Here we go. Let's break this down really quick, pop quiz. We bought the real estate property for $60,000. We fixed it up, we repaired it, and now it's up to a value of $160,000. Really quick, this is going to seem elementary, but I need to get clarification. Which number's bigger? 60, type 60, or 160, type 160? Which number's bigger? I'm a dumb hillbilly. Good morning. Even us dumb hillbillies can get it, boy. Come on now. Nothing is free. Giovanni, you're here for free. How much did you pay to get into this class? Good morning. Which number's bigger? 160 is the bigger number. Okay, so I bought an asset, and it's worth more. 60 to 160. Which number's bigger? 160, obviously. Okay, now we're all on the same page. If I want to get my profit out of the asset, meaning I bought it for 60, it's worth 160. There's profit in the asset. If I want to get my profit out of the asset, how do I get my profit out of it? Let me know in the chat. What is one way to get my profit out of an asset? I bought a stock, it went up in value. How do I get my profit out of it? I bought a house, it went up in value. Sell. Okay, so if I sell my asset, for sure I get my profit, yes? Of course. How many of you have kids and you want to buy assets and then when you pass away, give it to your children so they've got a better situation in their life? Type K in the chat for kids. Anybody want to do something like that, or just me? How many of you want to buy assets, pass on to your kids? Just type K in the chat. Is there anybody, or is it just me? I've got 2 kids. Yeah, kids. Okay, so if I want to get my profit out of the asset and I sell it, that's a direct conflict, isn't it, Paula? My goal is to pass it on to my kids, but if I sell my assets, that doesn't accomplish the mission. So what can I do? My Turo car is super busy. Let's go! Good morning, Shelly. So another way that I can access my profit and keep my assets is to get a loan against the value of my asset. So I bought the asset for $60,000 and it went up in value to $160,000. That means there's $100,000 of equity. Good morning, Captain Chronic. Of equity inside of that asset. So I can borrow and I can get it. You with me? So if I borrow it, good morning, Eric. Good morning, Sunshine. If I borrow it, I still access my profit. But there's an expense that's incurred with that. If I get a mortgage, let's say it costs me 7% interest. But I don't have to. I don't want to have to. Tony says, no, I don't want to give it to my kids. I want to teach them how to do it. What is the best way to teach your children? Is it by words or is it by example? Type W for words. Type E for example. Here we go. Let's get focused. If I sell the asset, I'm going to pay tax on it. 20% capital gains. So make sure that you're buying assets, Tony. Don't miss the lesson here. Your example is so loud, I can't hear what you're saying. Good morning. Which would you rather pay? 7% in mortgage expense, which you can deduct on your Schedule E tax form, or 20% in taxes? Type M for mortgage, type T for taxes. Which number would you rather pay when you access your profit? 7% type M, 20% type T. Once again, this is the IQ portion of the TikTok Live. If your IQ is below the level of bean dip, fortunately, money has no consciousness and it won't know, and you can still get rich. Okay? Of course I want to. Ding, 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 ding. I avoid the 20% tax. Because I didn't sell the asset, I don't have capital gains tax to pay. So I borrow against the value of the asset. I get to keep the asset. I can do whatever I want with it, so on and so forth. Heck no, Gotham Dark Knight, where you been? Good morning. But let's continue this idea. So I bought an asset for $60,000. The value's $160,000. Instead of selling it, I borrow against the value. Loans are not taxed in the United States, so I receive that money income tax free. But I still get access to that money. In this situation, on the asset that we're evaluating is $35,000 in profit. Except I've got a mortgage expense on that, 7%. Let's bring this conversation over here. You ready? Good morning. Let's say, hypothetically, my mortgage cost me $2,000 a month. And included inside of that mortgage is that 7% mortgage interest. But then I choose to rent it out. And I rent it to somebody. And the renter pays me, hypothetically, $4,000 a month. If my debt cost me 2 and the renter gives me 4, what is my profit? Somebody fill in the blank for me. $4,000 in income minus $2,000 in mortgage equals a positive what, Jason? Is that a positive $2,000? Okay, so in this hypothetical situation, I'm earning $2,000 a month in profit. In this example, who is paying my mortgage? Me, type M, or R, type renter? Type R for renter, type M for mortgage. Who is paying the mortgage interest? Interest is included in my payment. $4,000 in. Wait a minute, what? Let's come back to the question. The question was, I hear you, Mr. Moneyman. I bought the asset. It was worth $60,000. Let's rewind. It was worth $60,000. You got a loan, down payment. This is out of my pocket, 12 grand, 30,000 repairs. Total out of pocket, out of my pocket, it's 42 grand. But then afterwards, I've got a new value after repair, value of 160. I call my lender up and I say, can I get a new loan? He says, yes. $128,000 is my new loan. The very first thing they do is pay off my old loan. The net proceeds, $78,000, is direct deposited into my bank. Are we taxed on loans in the United States? Negative. You are not taxed. $78,000 hits my bank account, HIP, National Bank, tax-free. I recoup my down payment and repair cost, 35 grand, 42 grand, and I've got a profit, $35,000. All things being equal, it is not possible on a $160,000 house to get $4,000 rent. Fortunately, all things are not equal in this life. Good morning. Life is perfectly fair. Why? Because it's perfectly unfair to all of us. Oh! Next time your kid says, life's not fair, that's not fair. Life is perfectly fair because it's equally unfair to all of us. Good morning. Just because you haven't found that type of deal doesn't mean that type of deal exists. Really quick, mindset. Come here. Good morning. If you're new here, my name is Will. We go live all the time. If you want to learn how to buy assets like this, type A in the chat. I'm going to clean the board, and I'm going to teach you how we do it. I'm going to teach you how I did it. I've been financially free since age 29. There was no theory here. I didn't read a book last night and tell you what I read. I tell you what I do with my life. If you want to hang out with us every day and learn, come up here and tap on the follow button. Good morning. These are deals that we've done. Good morning. Let's walk through this. Let's do some money mindset stuff. Hey, I can't find a deal like that. Deals like that don't exist. Okay, let's break this down really quick. Pop quiz. Good morning. By the way, if you want to learn how to buy assets that produce profit, I've got a free class that I'm teaching. I haven't taught this class in a while. This class is going to be Saturday, August 8th, if you want to be there. Good. Dude, thanks. Having 35,000 is having 35,000 when you now owe 128. Now you're holding the bank's 35,000. No, you have 35,000 in profit. Good morning. Stay with me, Solo. If you want to be in the class, it's free. Just tap. Good morning, Alex. Just tap on this guy down in the corner. When it pops up, it'll say class, register, Saturday, August 8th, 9 a.m. Central Time, 10 a.m. Eastern. So if you want to be in the class, we're going to learn 3 things. You ready? Number 1, how do I find assets? Oh, brother, where art thou? Number 2, when I find them, How do I evaluate them to make sure they produce profit? I'm going to teach you a process of evaluating assets to make sure they produce profit. And number 3, what if I'm scared? What if I'm overwhelmed? What if I don't know where to get started? All of that stuff. Good morning. We learn how to take fake money. That money is not real. And then we buy fake AI-generated assets, also not real. And you can practice the same sequence over and over and over again with no risk. So now you know how to evaluate deals without risk. So when you find a real-life deal and you want to use real-life money, you've practiced this sequence hundreds of times. And the fear comes down because education goes up. Oh, brilliant. I know. If you want to be there, Saturday, August 8th, just tap on this guy. When it pops up, there'll be a class there. How many of you have got registered? Type R in the chat for registered. Just type R. How many of you haven't registered yet? Type X. And let's get into this deal. Somebody in the comments, let me teach you money mindset really quick. Somebody in the comments came in and said, you can't find a deal like that. Okay, I'm not asking you. I'm showing you what we've done. But here's the mindset problem. The problem is this is you with your big old head. Nice big head. You know what they say about big heads, right? It doesn't matter. So you got a big old head. That's great. And then you live in this world. The interesting thing is when we zoom out far enough, this is what Earth looks like. And that's you. But this is Earth. This is your experience. This is the possible experience. This is your knowledge. This is all that can be known. The more that you learn, the more you realize you do not know. I think that's a portion of wisdom. Good morning, Pavandeep. Good morning. I think that's a portion of wisdom, is understanding that no matter how much I learn, there's more that can be learned. No matter what I've been exposed to in my world, what my world looks like all that can be known, but that's not true. This world's big. And then if I zoom out far enough, this is Earth and this is the Milky Way galaxy. And when I zoom out further, what you have to understand is just because you haven't experienced it doesn't mean it can't be experienced. Amen? Does this make sense? Just because you haven't found the asset doesn't mean it doesn't exist. Just because you haven't found whatever you're looking for doesn't mean it's not out there. Cool? Good morning? Good morning! I love you. It's nice to see you. Let's get into some assets. You ready? If you're new here, my name is Will. We learn how to buy assets at Cashflow, maximize tax savings, all that stuff. So if you want to hang out with us every day, come up here and tap on the follow button. I go live all the time and teach my face off. We just went through a real estate deal. We might go through a couple more. We might get into foreclosures, self-storage, laundromats. I think I've even got a car wash and storage on the docket. So good morning, Paul. Good to see you. Good to see you. If you're new here, let me know in the chat where you're tuning in from. My name is Will. I'm in Austin, Texas. Nice to meet you. Let me know where you're tuning in from. Good morning. We'll get to some more money mindset stuff in a minute, but let's get back to the assets. How do I find the assets? How do I know they produce profit? And all the good stuff. All the goodies. What's up, Columbus, Georgia? Good morning. Missouri in the house. Good morning. Joliet, Illinois. Good morning, Illinois. What's up, Ohio? Good morning. My name is Will. I'm in Texas. What's up, Beaumont, Texas? Right down the road. So come over here. Check this out. Now, one of the things that I was teaching you is that when we evaluate these type of deals, these assets are a strategy. And I can take the exact same strategy and go apply it somewhere else. Good morning, Washington. This is true. I was referring to the rent value of the renovated property. Yeah, you took your experience and you applied it to our actual deal. Cool? Makes sense? Got it. Glad we got that figured out. South Africa. Absolutely love your energy. Let's go. What's up, Pennsylvania? So we're going to take the exact same principle, the exact same strategy on real estate. Buy, rehab, rent, refinance, repeat. We're going to apply it to another asset class. Let's go to storage. Not in Georgia by the barbecue place, Gotham. Lock in. No. Looking good today. Good morning. Good morning, sunshine. All right, so I found a self-storage facility. If I buy the self-storage facility, I own this asset. That means that I'm immediately buying income. That's awesome. What do you notice? When I buy this self-storage facility, I get everything inside the red line. What do you notice about the satellite image of this property? Good morning. Let me know. What do you notice? What stands out to you? Alexa, resume. Alexa, play Will's Disco Live TikTok playlist. What stands out to you?
Will's Disco Live TikTok from Spotify.
Empty lot, more empty space, room to expand. Yes. Yes. Big land. There's lots of room. So if I buy this self-storage facility, number one, I immediately buy income. I've got an asset that's already profiting. it's got customers, it's got revenue, it's got traffic, they've got marketing, they've been around a long time. All of these things are great news. Furthermore, when I buy the asset, I also get the land. In the comments, let's brainstorm. If I buy this asset and it's got a lot of land, what are ways that we can produce extra income with that land? Huge! Good morning, Brandon. What are ways that I can produce extra income with the land? Let's brainstorm together. Let's evaluate this together. I could raise rent, more parking, petting zoo? Petting zoo? RV park? I like petting zoo. That sounds awesome. I'm in. I'll be there every day. Parking lot, commercial parking spots. Maybe we could park tractor trailers, 18-wheelers, RVs, outdoor storage. Bring your boat, your RV, your jet skis, large item storage. What if there's construction going on in the area? I can contact construction companies, say, hey, if you need extra space to store your bulldozers or your backhoes or, no, not your mom, backhoes. It's a, anyway, doesn't matter. Boat storage, all kinds of stuff. So if I buy the asset, I immediately have ideas on ways that I can increase the income. Does this make sense? Type 1 for yes, type 2 for no. Everybody with me on this? 1 for yes, 2 for no. Roseanne, I'm glad you caught that. Yes? Makes sense? Come over here. We're going to take the same principle, the same concept that we just learned in real estate, and we're going to apply it to self-storage. You ready? All right, come here. So let's say, hypothetically, we go out there and we find this asset, and the asset's valuation, the asking price, is $400,000. Cool. Let's say the NOI. Everybody in the chat, type N-O-I. 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 Good morning. Good morning, Raging Robin. NOI. This stands for, I want you to learn the lingo as we go, net operating income. Net operating income. What is net operating income? It's the profit on the business before you get debt. So you're going to have revenue, especially in self-storage, revenue directly from the customers. Hey, can I store my junk here? Yeah, they give you money. You put the money in your pocket. But that's before expenses. Then you've got electricity, you've got property taxes, you've got so on and so forth to run the business. When all of it's said and done, revenue minus expenses is your net operating income, NOI. Cool? Cool. $400,000 is the asking price. The NOI, hypothetically on this deal, is $20,000. That's the profit on the asset after all the expenses. Cool. $400,000, NOI of 20 grand. So if I buy this asset, remember, let's go take a look at this bad boy. I buy the asset, I get this asset, and I've got all this land. Let's say we put a petting zoo in, or an RV park, or more storage, or whatever we're going to do, and we increase the revenue. We grow the income. When we grow the income, we also grow the profit. Well, if we do all of those things, let's say hypothetically that the $20,000 of NOI turns into, you ready for this? Maybe. Turns into $40,000 of NOI. Okay, if I double the NOI, what do you think happens to my value on my asset? Let me know in the chat. Give me some numbers. If I double the NOI from 20 to 40, what do you think happens? What number would this value turn into? Maybe it doubles. What number would that be? 400 times 2 equals... I know some of us went to public school and we're like, stay with me. So did I. $800,000. Okay, now let's break this down. What's NOI? Diva, great question. Net operating income. It's the profit on an asset or business before the debt. Great question. So if I bought this thing for $400,000, let's run through the entire scenario just like we did in real estate just a minute ago. If I put 20% down to buy a $400,000 asset, that means thanks, you're welcome. 20% on $400,000 means I come out of pocket $80,000. Out of my pocket, 80 grand. That means I get a loan for $320,000. I buy the asset, I improve the asset. The asset's profit, NOI, goes up. The value also goes up. I call my bank, I call my lender, I say, hey, can you reappraise my asset? They come out there and go, yeah, I get a new loan. Let's say they give me 80% loan to value. So my new loan after the new value is $640,000. Before they give me any money, they pay off my old loan. 640 minus 320 means how much money do they direct deposit into my bank account? 640 minus 320. How much money do they direct deposit into my bank account? Where's my math majors? Where's my NASA nerds that do rocket surgery? Where are we at? 320, Philly. $320,000 is direct deposited into my bank. Question. Because this is a loan against the value of my asset, am I taxed on that value, on that loan? Yes or no? Type Y for yes, we are taxed on loans. Type N for no. Do you pay tax on the money direct deposited into your bank account? No. Oh. Oh! Can I teach you a little bit more? Can I go a little bit deeper? I don't know if you know this, but Texas is a consent-first state, which means I have to get your consent if I go deeper. I like that. So just type D in the chat if I can go deeper. Type D in the chat if I can go deeper. If you're new here, my name is Will. I go live all the time. We learn how to buy assets that produce profit. If you want to hang out with us every day, just come up here and tap on the follow button. It's somewhere up there. Before I get deeper, I want to give everybody a chance to give me their full consent before I go fully deep, all the way in. If you want to register, I've got a free class Saturday, August 8th. If you want to learn how to buy assets that produce profit, I'm teaching for free. If you want to be there, just tap on this guy. It's in the corner. When you tap on it, it'll pop up. And at the bottom, it'll say class. Just tap on that button to register. And then on the next page, make sure you fully register so you add the event details to your calendar. Cool? So if you want to be in that class, Saturday, August 8th, we're going to learn 3 things. Number 1, how do I find assets? Oh, brother, where art thou? Where are the assets? I'm going to show you how we find them and evaluate them. Number 2, once I find it, how do I know it's going to produce profit? I don't want to buy an asset and lose my butt. I got you. I'm going to teach you our entire process from start to finish. Where I come from, Friday, from the rooter to the tutor. I'm going to teach you exactly how we evaluate deals. And number 3, what if I'm scared? What if I'm overwhelmed? What if I'm uncertain, fear, I don't want to lose all my money, all that stuff. I'm going to teach you how we take fake money, not real, and we buy fake, also not real, AI-generated assets. So you can take fake money and buy fake assets and practice over and over and over and over and over and over again. How you overcome fear is education, and how we practice education is called exposure therapy. I don't know anything about it, but I do know that if you practice with fake money, buying fake assets, doing the same thing 100 times, you're going to be better than when you first started. So if you want to be there, the class is free. Just tap down here to register. Once you get registered, say done in the comments. Just say done in the chat. We're going to come back to this right now. Done. We're going to go a little bit deeper if you're okay with that. Deal or disaster. It's awesome. I got a video going up in the group today. So good. Added some improvements to it too. Exposure therapy, yep. You get good at something where you can practice it over and over again. The reason you're not buying assets is because there's some type of fear. There's something holding you back. How we overcome that is getting you in the game with fake money. There she is! Sarah Gibbons! Is she back? She is back. Oh yeah, she was at the farmer's market playing with melons. Good morning! Good morning, Michigan. Good morning, Florida Keys. Yeah! All right, come here. Check this out. Let's get a little bit deeper. We got full consent. Everybody signed. I saw the consent forms. I'm back, baby. Better than ever. All right, so check this out. I bought the asset. I improved the asset. I got $320,000 in profit without paying tax on it. Cool? Walking through all that stuff. But I want you to understand this concept. How many of you want to buy assets, or you have a business, you want to build your business, and then one day you want to exit the business? You want to sell the business? Just say me in the chat. Or you want to buy assets, you want to build it up, sell it, exit. Let's walk through this example really quick. And you can keep it, you can pass on to your kids, all that good stuff. But I want you to understand a concept, okay? We're going to talk about multipliers. So I own a CPA tax firm. I'm in all 50 states. Our specialty is helping people lower their taxes, saving money, business owners, individuals, paying less in taxes. Anything I can do to legally screw the federal government, I will do it. I use the tax law against them, and I show you how to lower your taxes. Because of this, I see in the financials of a lot of businesses in all 50 states. Let me show you some of the mergers and acquisitions. They call this M&A. Everybody type M-A, like Massachusetts. M&A. Remember, he said legally. Amen, amen, amen. I look good in a lot of things, but I don't look good in orange. You hear me? Come on now. Mergers and acquisitions. So let's say I want to buy an asset. Let's say I buy an asset and the asset's revenue is $1 million. Now, depending on the industry, every industry's got a different multiplier. What's a multiplier? A multiplier is based on the industry and kind of what's going on in the market at that time. So if I buy an asset, it could be storage, it could be a laundromat, it could be a lot of different things. Let's say the multiplier is 2x. So when I buy the asset, The revenue is $1 million. So what would I pay if I'm paying 2 times revenue? What's my purchase price on this asset? Let's say the revenue is $1 million and the multiplier, I multiply 2x times the revenue to come up with my purchase price. Let me know in the comments. What would the purchase price be if the industry standard on whatever asset this is 2x? 2 times the revenue. So this is going to be our rev. My purchase price would be $2 million. Okay, cool. Now check this out. That's what I paid for it. Let's get inventory of a couple of different things. So I purchase it. I purchase for $2 million. But then you and I get together and we come in and we improve this thing. 5 years, 6 years, 3 years, 1 year. We're not going to worry about time right now. But let's say that I improve the value of this asset. So we increase the revenue with some of the strategies that I just taught you with assets we've done already. And let's say I improve the revenue. So now it's $2 million. The multiplier, let's say hypothetically, stays the same. Nothing changes there. What would my sell price be? I bought it. I built it up. I grew it. I want to sell it now. What would I sell it for? Let me know in the chat. Good morning. If you're new here, my name is Will. If you want to hang out with us every day and learn how we buy assets that produce profit, tap on the follow button. $4 million. When I own the asset, I'm making money. My income from the asset, my net operating income, my NOI is covering my debt, and then I keep the profit, and that goes into my pocket. Maybe I pay myself a salary, and then I have distributions on it, making lots of profit, which is awesome. When I exit the deal, I made a $2 million gain. What's interesting is I only increased my revenue by 1, but I got back 2. Oh, this is called levers. I can pull levers. I only added 1, but I got back 2. What? Let's do it again. Check this out. Let's say we buy an asset, and let's say the average laundromat. Let me give you. Whoa, that math got me woozy. Oh, stay with me on here. Let's say that I buy a laundromat, and I don't know if you've ever evaluated a laundromat, but they are always terribly managed. I ask for their financials. They go, "What are financials?" They go, "I got a water bill." I go, no. Like, do you have bookkeeping? Like expenses and income? Man, I'm just kind of like winging it. What? Do you have profit loss statement? A profit who? Do you have a balance sheet? Like, do you have any kind of? It's awful, terribly run. They're in the industry of laundromat. It's so bad. They call it backing into the numbers. Everybody say, back it up. Alexa, play Back It Up by Juvenile. The industry, laundromat industry, is so bad. They call it backing into numbers, which means you like get the water bill and you get the electricity bill, and then you do the calculation of how many amps are pulled and volts are used on all the different washers and dryers, and then you reverse engineer on how many loads they ran that year, so you can kind of estimate what they charge per load, and then you can figure out what their revenue might be, and then you get the water bill and then you cross-reference it against that. That's called backing into the numbers, and it's in the laundromat industry because they don't keep financials. It's a mess. Everybody understand this. Type Y for yes, type N for no. Does this make sense? Juvenile 930, good morning, Shelly. Good morning. Does that make sense? Yes or no? Type Y for yes, type N for no. The laundromat industry is such a mess, ironically. They're supposed to be clean, right? That you have to like back into the numbers and do all this weird stuff. So what if the industry standard on such a messy industry is 2x? But then you come along and you've got good bookkeeping. You've got good accounting. You've got a profit loss statement. You've got a balance sheet. You keep good track of your bank statements, your revenue. So when somebody buys your asset and they're competing and buying all the other ones, that's your competition on selling. Your ones looks much better. Yes or no? Do you think your multiplier would go up? Type up or type down. Do you think your multiplier goes up or down if you are much better than all the other businesses around you? That might add a 0.5. That might add a full 1 percentage point, 1 point. So instead of it being 2x, you might be 3x. Oh, okay, now what if, stay with me now. What if you like get a little bit more organized? Not just on your accounting, which is what you should be doing anyway. What if you, I don't know, keep record of all your customers? So now you have an email list. Is a business more valuable if you can buy the email list? Yes or no? Is a business more valuable if you got all of the customers' phone numbers? Yes or no? Is a business more valuable if you have their addresses? You've got multiple ways to contact the customers to maybe sell them more stuff and increase the revenue. Yes or no? Oh, so now you're like, let me get a little bit customer relationship management software built in. Maybe I design and build my own, and I got it built in. Does my multiplier go up? Yes or no? It's not just buying assets that produce profit. It's also buying them and running them correctly. So now maybe I increase the multiplier to 4x. What if I'm going to stop there. I want you to understand this, and let's stop. When I bought the asset, the industry standard on this laundromat was a 2x multiplier, and it was a $1 million revenue business. I paid $2 million when I purchased it. But then I did a couple of things that I just walked you through, and let's say I raised the multiplier to 4x. 4x, and I also increased the revenue to $2 million instead of $1 million. 4x times $2 million means I exit for what? Not 4 million. 4 times 2 equals? How do industries calculate that number? 8. So I exit for $8 million. Oh! What? You bought it for 2, you exit for 8. Learning and understanding these things can help you build wealth. It's not complicated. As I was teaching it, you were understanding it. You can do these things. And if you want to learn how to do these more, I'm going to teach a lot of this on Saturday, August 8th, 9 a.m. Central Time, 10 a.m. Eastern. If you want to be there and register for free, just say me in the chat, and I'll show you how to get registered. The class is free. We're going to learn how to buy assets that produce profit so you can retire without waiting until you're 155 years old. If you want to be there, the class is free. Just type me in the chat, and I'll show you how to register. Good morning. Sign me up, baby. Sign me up. I have a bucket full of consent forms. I'm registered. Let's go. Okay, so if you didn't get a chance to get registered, you want to register for free, tap on this guy. We're going to do a back-to-school class Saturday, August 8th at 9 a.m. Central Time. Tap on this guy. It's down in the corner. When you tap on it, it'll pop up, and then at the bottom, it'll say class, and you can register right there. Cool? Registered the class. It's free. Go now. I did. Let's go. I love it. So go get registered. Let's go look at some more deals. I'm going to break it down. No, not like that. I'm going to break it down for you. I'll show you how we do it. Let me show you how to get registered really quick. So on your side, it looks like this. You're in the TikTok Live, and there's a little orange button down there. Just tap on this guy. When you tap on it, it pops up, and then you see where it says class, how to get asset August 8th, 9 a.m. Central, 10 a.m. Eastern. Just tap right there. And then once you get registered, go to the next screen, and that's where you can add it to your calendar, have all the event details, all that stuff. Repeat customers, on and on, 100%. Done, let's go. And then once you're registered, come back in the comments and be like Mark and say done. But let's get back to another deal. Alexa, play Will's Disco Live TikTok playlist. Once you're registered or you're done, say done in the comments so I know you're good to go. Dude, I really got to get a haircut. What is going on up here? Do I need to sit down? Oh my gosh. I just got a haircut. Oh my gosh. It won't stop growing. Good morning, bingo. Good morning. All right, y'all want to do, what do y'all want to do next? Do you want to do buying real estate when, even though interest rates are high, type R for real estate? Or do you want to look at foreclosures? Type F in the chat for foreclosures. If you want to look at real estate, even though interest rates are high, type R. Done. Done. Let's go, Coach House. Or do you want to look at foreclosures? Type F. What about an empty property? Amanda, great question. How do I buy, what if I'm buying just raw land? How do I produce profit there? I'll walk you through some of that. Even the hair is rowdy this morning. Shelly, it's out of control over here. It is out of control. You know what I might do? I might do a walk-in haircut. I don't know. You know what we should do? We should do like where the audience picks the person that cuts your hair and then just see what happens. No matter what this guy says, give him a mullet. Come on. Short sales? Okay. We'll get into some stuff. Done. Everybody's registered, ready to rock. F. Sarah. Oh my gosh. Alexa, block that one. All right, here we go. Done. Everybody's registered. Okay, let's get to, I don't know, which one won? Let me check. Reverse mohawk. Dude, I'm down. I'm going at a bad one. Don't do it. Shelly, we need to see the molly. Come on, Shelly. I expect a video up later today. Get the molly out there. All right, let's get into, we haven't done it in a while, and he was in here earlier. He's probably not here anymore because he's just a ghost. He's a dark knight. Let's go look at foreclosures, all right? Y'all want to look at foreclosures? Let's walk through this. Let me show you why this is very valuable. Let's jump over here. Bring it over here, baby. All right, so let's take a look at foreclosures. Let's clean this up on this side. And let's look at foreclosures. Number one, we're going to understand why this is a valuable opportunity. And then on Saturday, August 8th, I'm going to talk deeply about this. I'm spending a lot of my time, my energy, my effort, and my money specifically at foreclosures, and I recommend you learn about what it is so you can decide fully educated if you want to evaluate these deals and get into foreclosures as like your thing. Be ready? Here we go. So let's talk about foreclosures. One of the reasons this can be so powerful, let's understand the basics, then we'll get to an actual deal. Nope, I'm out. Adios. So if I have an asset, let's say there's a house, and they get a 30-year mortgage. If they pay the mortgage for 30 years, what does the mortgage balance go to? Let me know in the comments. If they pay the mortgage, the minimum mortgage payment, and they have a 30-year mortgage and they pay it for 30 years, what is left on the mortgage balance? Let me know. Let me know in the comments. Parker, Enrique, nothing. Zero. 100%. There's nothing. They paid the mortgage payment. Nothing. No, Craig, good morning. They paid zero. Okay, so what if that's a 30-year mortgage? What if, and there's a variety of reasons somebody can get foreclosed on. You see tax liens, tax deeds. You hear a lot of conversation on that. I don't mess with that kind of stuff. I'll teach you why in a minute. But one of the reasons you can get foreclosed on is you don't pay your property taxes. This is America, and HOA can actually escalate to a foreclosure. Yes, if you leave your trash can out on the street too long, it can escalate where you lose your house. Welcome to America? What? But let's say that I find a house at the 15-year mark, and it's being foreclosed for whatever reason. And it's being foreclosed on, and this is the remaining debt on that foreclosure. But it's been 15 years since they purchased it, and they didn't refinance or take out any other money. Well, over that time, the value may have gone up. I don't know what the value is, but the value could be up here. If I buy the foreclosure at a foreclosure auction, the opening bid is here. And if I win, I own it for what it's worth up here. That difference in value is called profit. Everybody type P in the chat for profit. Foreclosures are powerful because from day one, if you do your numbers correctly, you can have a significant amount of profit. And if there's not enough profit in the deal for whatever it's being bid on, let's say the bid's way up here, then you just don't bid. Everybody understand? Type P in the chat for profit. This is why we focus on foreclosures. It can be very valuable. And if you're new here and you want to hang out with us every day, just come up here and tap on the follow button. My name is Will. I go live all the time and we learn how to buy assets that produce profit. I teach you what I did. If you didn't get a chance to register, I've got a free class. I'm going to dive deeper into this Saturday, August 8th. Not this Saturday, but next Saturday. Just tap on this guy. There's a little button down there. When it pops up at the bottom, it says class. You can register to be in the class for free. It's a free class. We're going to learn how to find assets that produce profit. Now let's go here. Let's learn the 5 steps on how to find and evaluate foreclosures specifically. How do I find and evaluate foreclosures? So step number one, let me know in the comments, to bid or not to bid? That is the question. Foreclosure, step number 1, what state are you in? Let me know in the chat. What state are you in? My name is Will. I'm in Texas. I'm going to teach you how we find and evaluate foreclosures in 5 steps or less. Tennessee, good morning, Anthony. Nate, Texas, Alabama, New York City, good morning. Massachusetts, Nevada, Texas, good morning. Florida, Tennessee, good morning. California, more Massachusetts, okay. All right, my name is Will, I'm in Texas, Rhode Island, Utah, good morning, Utah. Texas, Oklahoma. All right, so check this out. You've already completed step number 1, Missouri. I see you, Jason. You're going to go to the internet, so you're going to search. What are we going to say? Maryland, good morning. Who? You have to say it like that. Who maintains property records in Maryland? You're going to search to see who maintains property records in your state. By law, somebody in your state has to keep record of property transactions. Who does that in the state of Maryland? Who does that in the state of Tennessee? Who does that in the state of Oklahoma? Who in the state of Texas? You're going to search that. I want to figure out who maintains property records in my state. Then once I figure that out, that's going to be my source of information. We're learning how to find and evaluate foreclosures in 5 steps or less. I'm walking you through this live right now. So that's my source of information. If you want to hang out with us every day, come up here and tap on the follow button. So for me in the state of Texas, if I want to find and evaluate foreclosures, I want to search who maintains property records in Texas. I find my source is the county clerk's office. So then I go to the county clerk's office and I look for a list. A list. Hey, I hear you keep the foreclosures. We do? Where are they? They're over there? Awesome, thanks, man. That's it. That's the first 3 steps. Now let's get into the meat and the taters. Now I find an asset. I see it's a foreclosure. It's going to auction. How do I know if I should buy it or not? Let's go look at some information. Come here. Wait. Do you, yes or no, type Y for yes, type in for no. Do you want to evaluate a deal live right now? Type Y for yes, type in for no. Should we evaluate a deal? Give me some freeze-fried taters. Wait, what? Good morning, Taco Master. Yes? Should we? The New York deal maker, Enrique Soto. Rosanna, Mero, Margaret, Sean. Okay, all right, come here. Let's take a look at an actual deal. Let me teach you how we evaluate an actual foreclosure. All right, here we go. You ready? Good morning. This is what they look like. Big pencil time. Notice of substitute trustee sale. It says, notice is hereby given that a public sale at auction. Oh, what? This is what the document looks like. Notice is given to the public that we are going to do, good morning, Sarah. We're going to do a live public auction. Oh my gosh, let's go. Now, there's some information that I need from this document. Come here. I'm going to need some information from that document. What should we look for? I've got steps 4 and 5. So let's try to figure this out. Okay, in the comments, when Sarah Gibbons wakes up first thing in the morning, what does she look for? Does she reach for her phone? Does she brush her teeth? Does she go tinkle time? What is Sarah Gibbons looking for? Does anybody know? Type the first letter in the chat. What is she looking for? Oh, I know. There she is. What does she look for? When she wakes up, she barely gets the crusties out of her eyes before she starts looking for the D. Everybody type D in the chat. D, the common denominator, close. Denominator does start with D, but that's not what she's looking for. Everybody type D in the chat. When Sarah Gibbons wakes up first thing in the morning, she is looking for the D. She says, where is it? Give it to me. Give me the D. Give it to me. So we're going to look for the D too, but it's a little bit different. It's not the same D that she's looking for. We're going to look for the debt on the foreclosure. That's true story, by the way. True story. Ask me how I know. Doesn't matter. The debt. So we're going to walk over here. We're going to evaluate this document. Notice the public trustee sale. We're going to foreclosure auction. What is the debt amount? Well, I've given you a hint on this one because it's your first time. First time? Not my first time. Red arrow, red circle. What is the debt amount? Type the number in the chat. It's just in my mind. Ask the time, wake up, got to find it. She's got to find it. She can't help it, ladies and gentlemen. She can't help it. Where's the D? Give it to me. What is the debt amount on this transaction? Type the number in the chat. This is going to be relevant in just a minute when we evaluate if we should buy this foreclosure. What do you think? What is it? Anthony knows. I taught Sarah looking for something else. Oh, I thought Sarah was looking for something else. Yeah. She just likes foreclosures. What did you think? What did you think she was? Donuts? She does like her baked goods. Gluten-free, please. $175,000 is the debt amount on the transaction. Okay. So I've got a debt amount of $175,000. So how this works at a foreclosure auction is the lender or the bank that lent money on the transactions gets first bid. So JP Morgan National Bank, Wells Fargo, Rocket Mortgage, Mr. Cooper, whatever, they're going to bid $175,000. You and I have the opportunity to bid $176,000. $175,000 bid by Wells Fargo National Bank. Do I hear $176,000? Going once, going twice. That's how they auction these things off. Now, I don't know if I should bid. I don't know. I need one more piece of information before I bid. If I've got good D, what else do I need? Let me know in the chat. What pairs well with good D? Can you give me a letter in the chat? What's the first letter? If I've got good D, Binga, and I want to bring my good D to the marketplace, what am I looking to pair that good D with? Amazing V. That's right, V. If I've got the D, I need the V. Everybody type V in the chat. V. For ventriloquist? No. You looking for big P? No judgment. No judgment. The big P makes you happy? I'll take your word for it. I'm not trying it. I'm not trying it. I'm not trying it. I'm looking for the V. Everybody type V in the chat. What are we looking for around here? Around here, we're looking for the V. If I've got good D, I want to find the V. The V. What is V for? Your name's handsome and you don't know what the V is for? The V represents the value. The value of the asset. I know what it's going to cost me to get into the deal, but what is it worth? What's the value of the transactions? Come here. Check this out. So from the foreclosure announcement, hear ye, we have thy foreclosure. From the foreclosure announcement, I want to take the address of the property, and I want to go look up what it might be worth. You want the deed, the debt, and the value. That's right. That's right. And I want to go look up the value. Maybe I can run comps. What are similar 3-bedroom, 2-bath, 1,500 square feet properties? I can see what is sold. I can go to the county appraisal district. I can go to Zillow. All of these things are just to give me a ballpark estimate in the beginning. Is Zillow the most accurate? No. But it's going to give me a ballpark estimate in 2 to 3 minutes. Before I invest 2 to 3 hours, a quick Goog on the Google machine tells me the value of this property might be $325,000. You make me weak. Okay, we're not going to do that. So if the value of this thing is $325,000 and the debt is $175,000, what's my potential profit? Let me know in the chat. My potential profit, my PP. Let me know in the comments. 325 minus 175. What is my potential profit? How big is my PP? Give me a number. 325 minus 175 means the size of my PP is what? $150K. Oh! If that's true, should we continue? Type Y for yes, type in for no. If that's true, should we continue researching this asset? Yes or no? What say you? Yes? 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 I'm in! Can you dig it? I dig it. $150,000? Yes! On our first foreclosure? If you're new here, my name is Will. We're learning how to evaluate a foreclosure in 5 steps or less. If you want to hang out with us every day, come up here and tap on the follow button. I go live all the time. If you didn't get a chance, we're going to finish this deal in a second. If you didn't get a chance to register, I've got a free class Saturday, August 8th. The class is at 9 a.m. Central Time, 10 a.m. Eastern. It's not this Saturday, it's next Saturday. If you want to be there, I would register. It's free. We're going to learn 3 things. How many of you want to register? Just say me in the chat, and I'll show you how to register for free. Number 1, the first thing we're going to learn is how to find assets. How do I find these deals? Number 2, when I find them, what do I do with it? How do I evaluate it to make sure it produces profit? And then number 3, what if I'm scared? What if I'm worried? What if I'm overwhelmed? What if I don't want to lose all my money? Cool. I'm going to teach you how we take fake money, not real, and we buy fake AI-generated assets. So if you want to be there, just say me in the chat, and I'll show you to register for free. Let's go! Good morning. Okay, so to register, just tap on this guy. It's down in the corner. You see the little orange button? Just tap on that guy. It's down in the bottom. It looks like this, really quick, and then we'll finish this deal. When you're in the bottom, just tap on the little orange button. When it pops up, boop, it'll say class right there. So just tap on class right there. That's how you register. Cool? Beep. Tippy tap. Let's go for fun. And then once you get registered, say done in the chat. Now let's go finish this deal out. So let's get inventory of what we're looking at. Hippity hop. Do not stop. Come over here. So let's take inventory. We're looking at a foreclosure. We've got debt of negative 175. We've got a value of positive 325. That means we've got a potential profit of $150,000. Oh, Butchug, good morning, Butchug. Welcome, Butchug. So we found a foreclosure. The debt, the opening bid, is that an iPad? Yeah, this is an iPad. This is a TV. The foreclosure, opening bid is $175. The value is $325. The PP done. I'll see you Saturday, August 8th. The potential profit is $150,000. Cool. But, there's one more thing we got to look for. Anytime we're looking at foreclosures, we have to look for, everybody type L in the chat. 150,000. Good morning, Jennifer. Good morning, Sunshine. Good morning. 150,000 of renovations. Maybe. Probably not. I'll take that PP all day. I bet you will. Wait, what? Liens. Yeah. A lien. A lien is a debt. A debt is a lien. So what is a lien? If I hire a contractor to renovate my bathroom and I don't pay the final invoice on that invoice, that contractor can put a lien on my property. I owe him money. So he says, he goes to the county clerk. He says, this guy owes me money. They go, oh, he does owe you money. He signed a contract. They put a debt against my property, a lien against my property. That means if I go to sell my house, they pay the lien first, then I get paid. So he would finally get paid for the bathroom renovation that I didn't pay for because they put a lien on my property. So if I'm going to find a foreclosure, I want to evaluate if there's any liens that are going to chip away into my profit. Makes sense, right? So in the comments below, where would I go? Type 1 for 1, type 2, 3, 4, 5. Where would I go to find liens? If I'm looking for liens, which step would I return to? 1, 2, 3, 4, or 5? Sarah equals wild. You don't even know. You don't even know. I'm still walking with a limp. It's been 6 weeks. I got a limp. How? You don't want to know. I would go to the source. I would search, who maintains property records in Texas? That's where I live. Who maintains property records in Illinois? Who maintains property records in Tennessee? I find that the county clerk in Texas maintains property records. So now let's go. You ready? You ready? Now let's go look at the county clerk records. So I go to the county clerk's website. Are you ready for this? I go to the county clerk's website. Is that how I left you with a limp? No, Vero. No, Vero. You never submitted your application. Denied. So I go to the county clerk's office. I've got $150,000 in potential profit. County clerk website. Dallas County Clerk. Notice of child support lien. Oh! What? Baby mama drama. How many of you got some baby mama drama? Just say me in the chat. Good morning, Eddie. Good morning. Baby says otherwise. Oh, well, he got to stuttering real quick. 3 child support liens. I love that pencil. Carolina, eyes up here, okay? 3 child support liens. What? 3 different baby mamas. 3 child support liens means 3 baby mamas. How many baby mamas? Everybody type 3. Oh, Lord have mercy. That's what I'm saying. He owes $4,900 to baby mama number 1. He owes $1,100 to baby mama number 2. And he owes $24,820.60 to baby mama number 3. Oh! So, let's go back. $150,000 in potential profit. Tres mamacitas. So we've got liens. Oh no. Negative, how much? Negative 30,000. Negative 30,000. So 150 minus 30,000. What's our new potential profit? Let me know in the comments. 150 minus 30,000. What's our new potential profit? He's busy. He's been real busy. What's our new potential profit? This is a foreclosure that we're evaluating live right now. 120,000, like 120 something. Yep, 120. That Honda guy. Do we still like it? Do we still like it? What if liens are business loans? You need to look at the type of debt that there is, because you may not be liable for it. Like solar panel companies will put a lien on your property depending on your state. You need to look at your state law. But like in Texas, you don't owe debt on a solar panel. The previous owner got that debt. You don't owe it. But that's this state. It could vary by your state. That PP still got me interested. Sarah. So $120,000 is $120,000. Cool. I dig it. Now, at this point in the journey, a lot of people ask me, can you borrow money for a foreclosure? Of course you can. You can borrow money to go to a foreclosure auction, but you would need to do it before. Cool? Cool. So we're ready to go. Ready to go to foreclosure. I got my cash. I got my loans, cashier's checks, whatever I'm going to do. I'm ready to go buy this foreclosure. Good morning. Good morning. However, I did notice it says at the bottom of this page, it says page 1 of 2. Should I look at page 2 of the liens? Type 2 in the chat. Good morning, Kristen. From who? Like a hard money lender? You could. There are some lenders, like big lenders, that will lend on a foreclosure. Your interest rate is going to be a little bit higher, but it could be worth it. And then you could refinance to like an FHA or traditional mortgage afterwards. 2. Should we go to page 2? All right. So I've got 3 baby mamas here. 24, 11, 5. So about $30,000 in unpaid child support. I've got my money ready. I'm ready to go to foreclosure auction, and I'm ready to buy this bad boy. I go to page 2. Are you ready? Boop. I've got the original 3 baby mamas plus 4 new baby mamas. How many baby mamas are there? This is like one of those, like 6th grade math questions. If Johnny has 3 baby mamas and he goes out for a night and he gets 4 baby mamas, how many baby mamas does Johnny have? What is 3 plus 4? 7. 7 baby mamas. Johnny has 7 baby mamas. Johnny's got problems. Johnny has got problems. Johnny needs Bibles. That's what Johnny needs. He needs 7 Bibles. Johnny needs a different hobby. He's got 7 baby mamas. Now, we're not here to judge. We're not here to judge. This is a financial transaction. We don't judge. How many of you are judging? Type J in the chat for judging. We don't judge. We listen. Johnny, don't be skipping school. Don't be skipping school, says Carolina. So, 7 baby mamas. Let's get inventory of all the money that is owed. $33,000 in unpaid child support. $30,000 in unpaid child support. $30,000. I'm seeing a pattern. In unpaid child support. $39,000 in unpaid child support. $9,200. $24,000. Can y'all see it down here? $24,000 in unpaid child support. Judging Johnny. Judging Johnny sounds like a TV show. Yeah, we just go around the country finding unpaid child support liens. Judging Johnny. So, let's take inventory of all our child support liens before we go to foreclosure auction. We've got $190,000 of baby mama drama llamas, and we've got a potential profit before that of $150. What's a positive $150 minus $190? That equals, let me know in the comments. It equals what? What is the number? Our new potential profit is negative what? Negative $40,000. Oh my gosh. So if we buy this asset, we would lose 40 grand. I can think of way more fun ways to lose 40 grand than at a foreclosure auction. Although little Johnny lacks the ability to pull out, we, on this deal, are going to pull out. Everybody in the chat, say pull out. Can you just type pull out for me? Just type pull out. We're going to pull out. Clearly, pull out. Yep, we're going to pull out of this deal. We're going to teach him by our example on what he needs to start practicing in his life. Cool? Yep, we're going to pull out. This is why it's important to understand the 5 steps of evaluating foreclosures, which is what we just went through. Who maintains property records in your state? Go to that source, look for the list, find the debt, find the value, and then bonus step, look for the liens. If you miss the liens, you could have some problems. If you're new here, my name is Will. I go live all the time and we learn how to buy assets that cash flow. If you didn't get a chance to register, this is one of your last chances. I've got a class on August 8th. If you want to be there, the class is free. You want to learn how to find assets? Just tap on this button. It'll pop up and that's how you can register for the class. The class is free. We're going to learn how to find assets that produce profit. Where are they? Number 2, when I find them, how do I evaluate them? We're going to talk about self-storage. We're going to talk about rental properties. We're going to talk about laundromats. We're going to talk about car washes. We're going to talk about a lot of different assets. If you want to be there, it's Saturday, August 8th. The class is free. It's Saturday, August 8th, 9 a.m. Central Time, 10 a.m. Eastern. Just tap on this guy. How do I find assets? How do I evaluate them to make sure they produce profit on paper before I buy it? And then number 3, what if I'm scared? What if I'm worried? What if I'm overwhelmed? How do I practice buying fake AI-generated assets? They're not real. With fake, also not real money. You can take the fake money, you can buy the fake assets, and you can practice in virtual reality without any risk. So you gain the experience without the risk. If you want to be there, last chance. Tap on this guy. You see it down at the bottom? There's a little orange botano, the button. Tap on it. When it pops up, it says class. Just tap on how to get assets August 8th. Cool? Bam! Come on, baby! What? I got you. I got you. Good morning. All right, we got some more assets to get to. We've got more things to do. If you're new here, my name is Will. We go live. I've registered already in there like swimwear. Oh my gosh, I love it. What's the bidding competition like? How many of you are like, wait a minute, if I want to buy foreclosures, is it going to be a lot of people there? Is there going to be a lot of competition? How many of you are thinking that? Type 1 for yes. Dude, isn't there going to be a ton of people in there? Wouldn't that be, what's the bidding competition like? Like, dude, isn't there going to be, if it's so profitable, isn't there going to be 1,000 million people there? I'm going to talk about that much deeper on Saturday, but let me kind of give you a preview. Done, son, let's go. All right. I'm going to talk about this Saturday, August 8th, but sales were down in the state of Texas 2 years in a row at foreclosure auctions because it got cold. The auctions are held outside in most counties. There's 254 counties in Texas. The auctions for foreclosures are held outside. We had a cold front 2 years in a row, the first Tuesday of January, and sales were down 30%. Why? Because it was cold outside. That's your competition. Cool? Texas gets cold? Exactly. And when it does get cold, they panic. So that's your competition. How many of you would stand outside in flippy floppies and a Speedo if you could make good profit? Say me in the chat. And lender told me there is no way to lend for the foreclosure. That lender has no way to lend on a foreclosure. If there is profit in a transaction, somebody will lend you money. Hear me on this? If somebody said, hey, I want to buy a $5 million property. It's for sale for $1, but I don't have $1. Will you lend me $1? Would you lend them $1, yes or no? Would you have an underwriting process? Well, let me see the property, send me the address, let me drive by it, let me look at it, let me do an appraisal on it, you have an underwriting process. But in theory, if it's worth $5 million and somebody wants to borrow $1, would you lend them money? I'd stand out there in my Speedo, let's go, Fippy Foppy's still packed, come on. So there's different ways to get lending. There are a variety of different ways to get lending. And it's like there's variables. So you can do a DSCR loan where you qualify the asset, not you, but the give and the take in every transaction is you might have to put a bigger down payment down. So there's always a way. That lender doesn't speak for the entire world. Love you, but I'll walk you through it. Sold. Wait. So Vero says birthday suit. Oh my gosh. Okay, let's lock in. Let's go through. How many of you are like, dude, I would love to get assets. I'd stand out there in my birthday suit. Now you're telling me that twice. Is she trying to send a message? I think she's trying to send a message. How many of you are seeing the message? Type M for message. All right, let's get locked back in. Come over here. Good morning. How many times is he going to say he's going to get locked in, but he's not going to get locked in? I'm locked in now. I'm back just in time. Why does Gotham always disappear, but then somebody mentions birthday suit, and it's like the bat signal in the sky, and then he shows up? What is going on? Good morning. Oh my gosh. All right, so let's get into this. How do I find the money to buy the assets? We haven't covered one of these tax strategies, so let's get into it live right now. Gotham is here. Speaking of baby mamas, he is here. Let me show you some of the things that you can do to lower your taxes. Before I do that, let me show you why it's so important. We're going to cover one of Jason's favorite things. Jason, are you here? Jason, if you're here, say here. I got diesel fuel on my hands. I don't care. I'm working with the DEF system right now, man. All day, baby. ShamWow that board. All right, yeah. A little wipe on, wipe off, Mr. Miyagi. Okay, come here. Let's take this one. This one, no. This one. This one looks good. Okay, so let's take this guy. This is Jason's favorite thing on the entire thing that we cover. This is his favorite. So every time I get paid, every time you get paid, out of your paycheck, there's some type of tax. What tax is that called? Let me know in the comments. Can I borrow from my life insurance policy after placing it into a trust? It depends on what your setup is. What tax is that called? And here we go. Jason immediately breaks into sweats. Federal what? What kind of tax am I paying? Federal, what tax is that comes out of my paycheck? Comes out of my paycheck. Every time I get paid, income tax. So every time you get paid, hear me on this. This is crazy. Before you get paid, Uncle Sam takes a little bit of it. Sorry, it ripped that way, but now we're going to have to just deal with it. Every time you get paid, Uncle Sam takes a portion of your money and he puts it in his pocket, and then he gives you whatever's left over. And sometimes this is what it looks like. Then you have to take whatever's left over and you have to go to Mr. Banker Man. You have to go buy some stuff. Jason, tears are coming. And I go to the store and I buy some stuff. When I start buying stuff, what is that tax called? OxyClean guy, I think, Billy Mays, RIP. What is it called every time I buy something at the bottom of the receipt? What tax is that called? Stop it, Willie. Stop it. It's called sales tax, Kristen. It's called sales tax. It's a little bit. Jason, deep breath. It's like a bad chiropractor. Deep breathe in with me. Okay, there's the adjustment. There's the adjustment. Now you paid income tax and sales tax. Oh, Jason's freaking out. He's calculating the numbers. He's going, he's like, oh my gosh, I got to get out of here. This is bananas. So Jason gets in his car. He goes, I'm going to speed home. If I can get home, they'll stop taxing me. I'm going to outrun the tax man. I don't know if it works that way, but here we go. Now, Jason gets in his car and he realizes that it's a little low on the stuff that makes it go. He needs some go juice in that car. So he pulls into the station, he gets the handle, he puts it in the car, and he starts pumping. What tax is Jason paying as it's pumping? Every gallon, what tax is that called? Gasoline tax or fuel tax? Ah! Did you know that Jason, hold on, breathe in with me. Just making a little adjustment, not a big deal. It's just a small amount of tax. It's not a big deal. It's fine, it's okay. He's paid income tax, sales tax, he's paid fuel tax. Jason lives in Missouri. Did you know that in the state of Missouri, you pay property tax on the car? So when you buy the car, you pay sales tax. Then you have to pay property tax every year that you own the car. If you live in a state that you have to pay property tax on your car, type your state in the chat. How many different ways can you get taxed on a car? Then if you drive that car and they want to expand the road, they raise bond money. Oh! And then you get on the road and the money that they raised from the bond money, which is taxes, to build the road, they now have installed tolls. So now you pay tolls. That's a thing? JB, I live in Texas. We do not have property tax on vehicles. But it does exist. Look at the states. Missouri, South Carolina, Massachusetts. So on. So fuel tax is not the only tax that Jason has to pay for it. Funny how this country was founded. Isn't that interesting? Oh my, you just reminded me of my inspection. I got you, big dog. I'm here for you. Jason's panicking. In South Carolina, if your car is from the 70s, it's only like $14. Let's go, bring the 70s back. I'm in. Property tax on lease vehicles. Yes, isn't it crazy? So Jason's panicking. He's going, I got to adios vamonos. I got to get out of here. So he gets in his car and he drives home. He goes, if I can just get home, they'll stop taxing me. So he speeds home. He gets in the car. He slams the door. Jason's kind of paranoid about the tax man. So he's got all these locks. He made it home. Because he made it home, the tax man can't get him, right? He notices that because he's got a house, they recently appraised his property. There's a letter from the county appraisal district, and it says, we have appraised your property for free. Do they do it for free? What is the tax that Jason has to pay because he owns a home? What tax is that called? Good morning. If you're new here, my name is Wet Willie. We go live all the time. If you want to hang out, tap the follow button. What's it called? It's called property taxes. Son of a gun! Come on, man! Just deep breath with me, everybody. Breathe in, breathe out. I'm going to talk you through this. My name is Uncle Sam. I'm just going to take a little bit. Ah, God! Okay, Jason's full panic at this point. He's paid income tax, he's paid sales tax, he's paid fuel tax and property tax on his car. He's paid property tax on his car. He goes, at least let me look at my investments. So he looks at his investments. Investments have been doing what investments do over time, and they go up. Yay! What tax is that called? Jason had some gains on his investments. What tax is that called? Just the tip. We're about to play it, Gotham. Just me and you. That's called capital gains. Yes, in the United States, you make money. So breathe in. And then Jason has to get by with whatever's left over. These are just a handful of the taxes that we have to pay. The principle and lesson that I want you to get out of this is that taxes by far are your greatest expense. So if I want to focus on finding the money to buy the assets and the assets buy my freedom, how do I get the money? We're going to focus on the greatest expense that you have in your lifetime. Because if it's my greatest expense, even if I just reduce it by 10%, that 10% is the biggest expense I've got. Therefore, I've got more money to buy assets that produce profit. So what we're going to focus on now is finding ways to legally lower our taxes. Does this make sense? Type T in the chat for taxes, and let's legally lower them. I'm going to show you step by step how you can do it. My name is Will. I go live all the time, and I teach you how to buy assets that produce profit. I also own a CPA tax firm. I teach clients in all 50 states how to lower their taxes. Good morning, Jeffrey! Good morning! Just come up here and tap on the follow button if you want to hang out with us. I'm going to show you step by step how we do it. All right, so how do I lower my taxes? How do I find tax savings? What are the things that I can do? And here's the entire cycle. Here's the entire sequence. Let's jump over. Come over here. Come here. Come with me. Let's jump over here. Good morning. Step by step. Absolutely. I'm going to show you live right now. We're going to start with Gotham's one of his favorite. And please show us. I got you. I got you. And then I've got a ton of free resources I can send to you. But good morning, Renee Five Guys Miller. Good morning. Good morning, sunshine. Let's go here. So if you're a business owner, type B in the chat. If you're an employee, type E in the chat. Where do you stand? I need a CPA in Tennessee badly. We operate in Tennessee. So my name is Will. I've got CPAs. I own a CPA tax firm. I'm in all 50 states. If you need tax savings help, I've got a ton of free resources. In just a minute, I'm going to open up free tax savings calls. I don't have unlimited capacity, but I do set aside, myself and my team, I set aside a little bit of time. If you need help with that, just say me in the chat. And I'll open up a little bit early so you can reserve it before it gets, they sell out every time. So you can like go hurry. So business owner, employee. If you're a business owner, type B. If you're an employee, type E. I'm going to show both of you how to legally pull down your taxes. What can I do? What are the strategies that I can implement? I'm going to show you tax law. I'll show you IRS citation. I'll show you how to search this stuff on your own. Me. Okay, if you want to book a tax savings call, come here. This is not unlimited. I set aside time. It's free, but it's not unlimited. Cool? Here we go. When you're in the TikTok live, just tap on this little orange button right here. Boop. When that pops up, just go a little bit. Scroll up a little bit. You see where it says tax savings estimate call? I offer those calls for free, but they are not unlimited. So you can never, ever, ever buy my time. However, if you need tax savings help, I will lend it to you for free. And on these tax savings calls, I will show you legally how you can lower your taxes step by step, okay? So one more time, if you want to save your spot, go do it now. Tap on the orange button. When it pops up, just go a little bit. At the bottom, it says tax savings estimate call. Cool? If you want to save your spot, go do it now. Then come back in the comments and say done. But let's get into this. Let's start with business owner. Then I'll go to employee. And I'll bounce back and forth between business owner and employee on how you can lower your taxable income. What can you do? Cool? All right. So let's go here. Let's jippity jump over to this part. Maybe here. Yeah. Okay, Gotham, are you still here? Yo, I need to sell some stuff, baby. We'll get to selling, baby. All right, let's understand some of the basics. We got the basics out of the way, and then we'll get to some of the groovy stuff in a second. Is Gotham still in here? All right, so for my business owners, step up. And then I'm going to get to employees. I'm going to show everybody and their mama how to lower your taxes legally. I'm going to show IRS citation on all of this. And then I don't know what's going on with the hair today. I want to work on that. Okay, so in the United States, as a business owner, you can legally lower your taxes. So in the United States, as a business owner, you can legally pull down your taxable income. And this opens up opportunity for you because you're in ownership. If you're an employee, you don't own anything, it's going to be very expensive tax-wise. As a business owner, you own a business, and that creates a lot of tax deductions. I'm going to show you the Schedule C form, which is kind of the building blocks of all the other stuff. And then for employees, I'm going to show you how buying assets actually lowers your taxable income. Schedule E, line 18. I'm going to walk you through a lot of that. But let me show you this. In the United States, your business can legally hire your kids to work inside of your business. I'm going to show you step by step how this works and how you do this. Cool? I was going to say you need a haircut. Will you give me a haircut? Oh, bro, I need to get it done. Stat. Okay, so let's say that I hire, how many of you have kids? If you have kids, let me know their age in the comments, because the next thing we're going to get to is what age can I hire my kids at, and I'll show you. But how old are your kiddos? Let me know in the comments if you have kids. Me? I've got a 12-year-old son and I've got a 10-year-old daughter. So I've got 2 kids. I'm going to show you what I do in my business and as a CPA tax firm, what we do for some of our clients. Not yet, hopefully, keep practicing. 30, 25, 21, 13, 17. How old are your little kiddos? Grandkids too. You can do this with grandkids. If you've got kiddos, you want to hire them in your business, how old are your kiddos? I'm going to show you because the next question naturally is what age can I hire my kids at? And you got a 7-year-old over here? Now you tell me? Didn't we? I thought it was only one night. Verify. 19, 27, 24, 16. I already put them to work. In the United States, your business can hire your kids to work inside of your business. So let's walk through this. 16, 16, 12, 12. Kristen, are those double twins? Are those double twins? Let's go, Kristen. So you can hire your kids to work inside of your business. There's 4 rules we have to follow. 1, 2, 3, 4. 4 rules we have to follow. Number 1, the kid has to do real work in your business. You can't say your kid works in your business, they don't actually work in your business. That's suspicious. They have to do real work. Number 2, the job has to match their age. You can't say your 3-year-old is driving forklifts around your warehouse. Well, I'm an electrician and my 2-year-old helps me wire up the panels. No, no, no. It's got to match the age. And then I'm going to show you the other 2 rules in just a second. But legally, you can pay your kids up to $16,000 and change per year. When you pay your kids to work in the business, the kids, 2 different angles. If they're under the age of 18, I'll show you over 18 in a minute, and like in college. If they're under the age of 18 and you have the right setup, most people do not have the right setup. But if their kids are under the age of 18 and you have the right setup, they receive the money income tax free. So you take $16,000 off of your taxes, your kids receive it income tax free. Oh, how much would you save? Well, the average person saves about $3,000 per year per kid. In the comments below, how many kids do you have? Kristen's got 4 kids. So if she saves on average $3,000 per kid, how much money would she save every year? About $12,000 in tax savings. How many tax strategies is this? Just one. Just hiring your kids in your business. How many tax strategies are there? We implement about 700-ish. Anybody need kids? Got them. Hold your horses. We'll get to that. Hold on, got them. Hold on, got them. So this is about $3,000 in tax savings per kid that you hire inside of your business as a parent. Hire the kids in the business, $16,000 maximum deduction. With the right setup, they receive it tax-free. But wait a minute. How many of you are like, dude, you can have a couple of mine, let's go. How many of you are like, wait a minute. I would love to hire my kids. I would love to pay them $16,000 per year per kid. One problem, I don't have an extra $16,000 laying around. Say me in the comments if you're thinking that thought. Dude, this sounds great. I get it. I know it's probably real. That all makes sense. But I don't have an extra $16,000 laying around. Just say me in the comments. Really? Wouldn't it be great to be rich? This is why the rich get richer. Because it takes more money. Baby, stay with me. I got you. You don't need new money. Watch this. In the comments below, what are some of the things that we spend money on to raise our kids? Give me some ideas. What are some things that we spend money on to raise our kids? Let me know in the comments. What are things we spend money on to raise our cheer-ins? How many of you feed your kids? Food! Food! What else do we spend money on to raise our kids? School! Education! Education! What else do we spend money on to raise our kids? Medical. That's a separate deduction if we do an HRA. But yeah, let's just count it. Xbox, PlayStation, clothes, sports. Do your kids play sports? My son's got football camp. My daughter's got cheerleading camp this week. What are you? Check this out. I've got money, and I take the money and I feed my kids. You feed your kids? If your kids are 16 years old, you've probably been feeding them for some time. Tutoring, football, soccer. Watch this. Everybody in the comments, pay attention. Type B4 in the chat. B4. Bingo. B4. Before you feed your kids. What? Before you pay for sports. What? before you pay for tutoring, before you pay for education, before you pay for the healthcare expense. You've already, D5, you've already got the money. Before you spend it on your kids, watch this, same money, no new money. You don't need new money, take the same money. Before I feed my kids, watch this. How can I find a way, watch the money. How can I find a way to hire my kids in my business? Number one, they got to do real work. Number two, the job's got to match their age. Number three, I got to pay them fair market value. Just because your little sugar bear is cute as a button doesn't mean you can pay them $2,000 an hour. What is the fair market value for that role and responsibility in your marketplace? Is it $20 an hour? That's what you can pay them. Real work, job match their age, fair market value, and it's got to be ordinary and necessary to the business. Ordinary, necessary, what's that mean? Let's say you're a real estate agent, and let's say it's normal, necessary, and ordinary and routine for you to put a sign in the front of your listings to market and advertise it. You can hire your 10-year-old son to put the sign out. You see what I'm saying? Child labor for sure, yeah. So the kids do work. You pay them for the work. You document the work. They do the work. You pay them for the work they do. With the right setup, it comes out tax-free. It goes into a bank account in your kid's name. Who is the guardian or custodian? Who controls the money in their bank account? Let me know in the comments. Over 18, I'll show you a different strategy, but it's very similar. Who controls the money in your kid's bank account? Let me know in the chat. Who's the guardian? Who's the custodian? Your kid's 9 years old, 16 years old, 12 years old. Who controls the money? The parents. Good morning, 50 shots. The parent controls the funds. Oh, can I then take that money and pay for the food I was going to pay for anyway? Can I then take the money and pay for the sports I was going to pay for anyway? This is how you deduct the cost of private school. You hire your kids first, then you pay for private school. This is how you deduct the cost of, you don't need new money. Proper tax planning is two things. Number one, it's permanent forever, not a delay, not a tax bill 30 years from now. And can I use the money for 529? Watch this. You can do a couple of things with this. You don't have to pay the bills. They qualify for a Roth IRA now, or I could contribute to a 529 college savings plan. College 529 has expanded. It became even more valuable now. That if your kids decide not to go to college, you can use the 529 plan for trade school, or later on you can convert it into a Roth IRA. Oh, you picking up what I'm putting down? But my children, so I do a lot of different things for them. We buy assets that produce profit. I take my kids to analyze real estate properties, ice vending machines, storage units, things they're interested in. But I also have Roth IRAs for them since they were born. What? Yeah, they've had earned income in my business. How many of you need to learn how to do this? Say me in the chat. My name is Will. I own a CPA tax firm. I am in all 50 states. We specialize in maximizing tax savings using tax law. I'm going to show you tax law in just a second. If you need to learn how to do this, just say me. Me. Okay, I'm going to get a little bit deeper into this in just a second. If you didn't get a chance and you want to book a free tax savings call, they're free, but they're not unlimited. I don't have unlimited capacity. So if you want to book a free tax call, there's a button somewhere down here. Just tap on the button in the corner. It'll pop up. Scroll a little bit when it pops up and it says free tax savings estimate. That's how you can register for the free tax call. Myself and my team host these, so keep an eye out from Dave or Quinn. They'll text you to schedule time to meet up. Cool? Happy to help. Anything they can do. Tell me about your business. Tell me about your job. Tell me about what you're trying to do financially, and I will probably show you tax strategies that will help you. If I don't have any, I'm like, I don't know, dude, good luck. I'll tell you that too. Do you get a lot of business from Alaska? I've got a handful of clients in Alaska. Anchorage. My grandfather was actually stationed in Anchorage at the Air Force Base back in the day, before Alaska was actually a state, before Russia sold it to us. Anyway, long story. So if you didn't get a chance, you want to book a tax savings call, I'm going to dive deeper into this. But if you want to book a free tax call, here's what it looks like on your side. Tap right here. Boop. When that pops up a little bit, you see where it says tax savings estimate at the bottom? Just tap on that guy. If there's any availability, you can save your spot, come back in the comments and say done. But let me dive a little bit deeper into this strategy, show you tax law and citation. The first question, what if my kids are 3 years old? What if my kids are 2 years old? How old do my kids need to be before I can hire them? Great question. Let's take a look at this infographic. This is by the U.S. Department of Agriculture. Everybody say USDA in the comments. USDA. USDA in the comments. U.S. Department of Agriculture. So the USDA, which is a government organization, put together this. This infographic is raising the cost of raising children. That's not the point. The point is this. They hired this young man to be inside this infographic. Question number one, what do you think? How old is this little dude? Little buckaroo right here. How old is little buckaroo? What do you think his age is? Because the question I always get is, how old do my kids need to be before I can hire them? How old do you think little buckaroo is? 3 to 4? 2, 4? How old is he? U.S. Department of Agriculture, hired little guy. Maybe 4 years old. Maybe 5, but not past 5. He's young. Question number 2. What job function is he performing for the U.S. Department of Agriculture? What would you call this job? Is it janitorial services? No. Is it accounting? No. Modeling. In the category of advertising. Marketing. Oh! Wait a minute. So if the USDA can hire 4-year-olds to be in advertising and marketing, can you hire your kids at 4 years old? Can they be on your business cards? Can you take pictures and they be on your website? Well, no, my kid's a newborn. You can't hire newborns. Let me go here. Let's just go to the internets and let's just get inventory really quick. All right. So you talk with your CPA and your Mr. and Mrs. CPA says you can't hire your baby. Your baby has to be old enough to perform work inside of your business, and babies can't work in your business. So what I want you to do is I want you to grab your CPA, your tax person, by the scruff, kiss him because you love him, and then take him to the grocery store. You walk down the diaper aisle of the grocery store, and you say, Mr. or Mrs. Tax Person, what is this baby doing? In the comments, let me know. What is the baby doing in this responsibility, this role? Wait a minute. What is the baby doing on the side of the diaper box? Are they doing accounting? Are they doing, what are they doing? If Huggies can hire babies to be on advertising, marketing, and modeling, can you hire your baby? Mr. and Mrs. CPA, how come Huggies can do it, but I can't? Is it possible? Question number 1, is Huggies paying this baby? Yes or no? Type Y for yes, type N for no. Is Huggies, Pampers, insert diaper brand here, do they pay their babies? Let's go a little bit deeper. If the diaper brand didn't pay their babies and that leaked out in the news, they wouldn't be a diaper brand much longer, would they? Did you ever watch Mary-Kate and Ashley Olsen? Full House? Did you ever watch a movie with a child actor in it? Did the child actors get paid? Yeah, the Screen Actors Guild, SAG Awards, Screen Actors Guild has an entire rate sheet on what child models and actors should get paid. Oh, I'll go into zoning this morning. Let's go, William. I love it. You can hire your kids. Hear me. You can hire your kids at any age as long as the job duties match the age of the children. One of the ways that we do this in my CPA tax firm is we do NIL deals. Everybody type NIL. That stands for name, image, likeness. NIL. Let me teach you what we do. If you need CPA tax help, you want to sit down and talk to us and estimate tax savings together, tap on this guy. I do not have unlimited capacity. If there's any availability, go snag it and bag it while it's there. There's a little orange button down here. Tap on the orange button. When it pops up, just scroll a little bit, and it says free tax savings estimate call. So a name, image, likeness deal. This is very popular, very loud in the college athletic community. College football players, basketball players, lacrosse, soccer, baseball, all this stuff are getting NIL deals. Name, image, likeness. Name, image, likeness. What this means is the universities can use the athletes, these kids, they can use their name. They can use their face, their image, their likeness in their marketing to sell tickets, to sell jerseys. And in return, the universities are going to pay those athletes money. That's an NIL deal. Well, guess what we do? In my CPA tax firm, we have different businesses all around the United States. I've got clients in Arizona, Texas. We're doing this with a client in Tennessee, out west, and even in New York right now, where their children are on an NIL deal with the company. So they can use their name, image, likeness. Then they take graphics for one plumbing company in Dallas-Fort Worth, and they wrap the trucks. So when the service guys are driving around doing plumbing and a little bit of air conditioning, HVAC, when they're driving around, the children are advertising on the side of the trucks. That's an NIL deal. The kids are getting paid to use the name, image, likeness of the child for advertising and marketing for the parent's business. Does this make sense? Type Y for yes, type N for no. Oh, what? My daughter's getting that let's go doing sports. Absolutely. So there's nothing stopping you from, as a parent, hiring your children to work inside of your business. But then it can go on and on and on. And if you want to get a little deeper in this, we can. Here's kind of how I break it down from like, I don't know, maybe 0 to 5, maybe 6 or 7. The kids can't do that much. Maybe it's just modeling and advertising. But let's say from like 6 to 11, I don't know. You know your kid better than I do. I don't know them at all. What job duties can they perform here? Maybe they can do cleaning in the home office. Maybe they can do organization. Maybe they can get the mail. Like maybe they can do some basic stuff. Plus, they can do modeling. I'm going to have my daughter in this. Love it, love it. Plus, they can do advertising. Plus, they can do an NIL deal, right? And then maybe from like 12 to 17, now maybe they get a little bit different jobs. Maybe they're helping you with accounting, income and expenses, bookkeeping. Maybe they're helping you with, like, you see what I'm saying? Different ages, they can do different things. They've got different skills, different capacity, different understanding. So then I would give them different jobs. And I would document these things. Each of these roles has a different pay wage. What you would pay a bookkeeper is totally different than what you would pay a janitor for janitorial cleaning services. Hey, I've got an office. My kids go down there once a week and they clean the entire office. They scrub the toilets, they vacuum, they sweep. Okay, well that pay rate per hour is different than a bookkeeper per hour. So we need to document those two roles differently with different wages, and then we document how many hours they worked at that rate, how many hours they worked at this rate. Cool? So that's like the nitty gritty of how we document it, but that's how you do it. Awesome, awesome. So that's one way. In just a minute, I'll show you how I pay my kids. Talk about overworking the kids. The child, I don't know. Are you overworking your kids? I don't know anything about your children. Cool? But that's what we need to teach your kids, how they can do one job one time. Let me show you this. You should probably teach your children how they do one job one time, but then they get paid all the time. These kids did one job one time. They went to one photo shoot, and now they're using their images, and they're getting paychecks every day, every day, every day. Maybe you should teach your kids that. Underwork, overpaid. Amen? Do you hear me on this? Underworked and overpaid. That's what we should be teaching our children. You did the overworking part in your lifetime. You know how to work hard. What did you learn from that, and how can you change the future? Having kids is your chance to do it. Good morning. If you're new here, my name is Will. We go live all the time. We learn how to buy assets that produce profit. If you want to hang out with us every day, just tap on the follow button. I go live all the time, and I teach you what I did. How many of you want to learn how to buy assets that lowers your taxes? Just type A in the chat for assets. I'm teaching them. I tell them I could bring the water, but I can't make you drink it. Amen. I love it. How many of you want to learn how to buy assets, and those assets pull down your taxable income? You want to talk about that next? Alex, assets. SMA, assets. Should we get into that? All right. Let's do that. Let's go this way. I might have one up my sleeve. Yes, very fun. All right, how's my 7-year-old? Is she doing good? I hope so. It was a fun night. But you gotta stay in Houston. I gotta stay in Austin. You know what I'm saying? We gotta do our thing. Okay, let's go. Maybe it's over here. Y'all want to do? We could do Airbnb. Or let's do this one. Don't your kids have to have payroll? Loving the polo, Kendall. What's up, baby? Good morning. How many of you think I look handsome in this shirt, huh? You think I look handsome? Man, I'll make this shirt look good. No, these shirts are nice, man. What I love about these shirts is they don't fall down. Like a lot of times you get a polo and you look like an idiot because it's like, dude, is this guy a 60s disco? Like funk guy? No. So the polos stay up, which are awesome, by the way. These shirts are made by forefathers. They're amazing. They make me look good. I already look good, but they make me look gooder. If you want to look gooder, I've got a link in my TikTok profile. Just go to my site, and it's got a coupon code. For fathers, yes, they're awesome. So just search them, and if you use coupon code MONEYMAN, that's me. If you use coupon code MONEYMAN, they give you 20% off. Oh, what? Yes, I know, it's awesome. By the way, if you want me to send you that coupon code, text me the word polo. My phone number, you want my phone number? I'll give you my number. 737-510-2009. If you text me the word polo, then I'll send you a coupon code for one of these shirts. 20% off. Doing sports, not in the chat. Like literally a text message. My phone number, 737-510-2009. I'm going to clean up the board. We're going to get to assets. Gooder. Yeah. We're going to get to assets right now and how buying assets can increase your income, retire you sooner, and lower your taxes. In the meantime, this is your chance. Text me polo. America 250 to 1. Oh my gosh, Gotham. All right, yeah, let me answer that question. Let me cover that, and then we'll get to assets. I forgot Gotham. The reminder is reminding. Good morning. All right. So let's go over here, and let's walk through this. Way more gooder. Baby, come on now, I'm telling you. And then we'll get to assets. So we're going to talk about Airbnb. We'll talk about laundromats, even some self-storage. I'm going to cover a lot of ground on a lot of different things. But if you didn't get a chance, we just covered how hiring your kids inside of your business can pull down your taxable income. Money never leaves your house. When your business pays your kids, you control the money in their bank account. You can use that for whatever. So we walked through that. But how many of you don't have kids? And you want to talk about other tax strategies? If you don't have kids, say no in the comments. Yeah, baby, let's go. How many of you don't have kids? Just say no in the chat. Like, okay, that's great tax savings, but I don't have any kids. What the heck am I supposed to do? Is that the only thing? No kids. Okay, so if you don't have any kids, the first number one thing you want to do, everybody type P in the chat. I don't have kids. What are other tax strategies that I can do to lower my taxes? Type P in the chat. I want you to learn and understand the lessons here. I have dog. Me dog happy. Me happy with dog. Me now have more dog. P. No, none, zip, zadag. Okay, so if you don't have kids, lesson number one, keep practicing. That's right, Eddie. Keep practicing. Practice. It's all in the hips. Once you get the hips figured out, the kids will come. Practice. Number two, I will. Okay, Renee, keep practicing. Number two, if you don't have kids, guess what? Gotham can give you some kids. So Gotham currently, he's doing an extension. He had a bonus, he had a special. It was America's 250th anniversary. So Gotham, he's so generous. He's in the chat right now. It's a 250 for one special. So you pay one low price, and you plus 249 of your best girlfriends, just girlfriends, please. 250 girlfriends can go over to Gotham's house for one night and one night only for one low price. Each of you will leave with two things. There he is, ladies and gentlemen. Slide into his DMs. You leave with two things. Number one, give it about 9 months to ferment and populate and grow, and you're going to have a baby. Congratulations. Number two, you will also be able to hit him with child support. Where I come from, that's called multiple streams of income. So you can get the tax savings from having a kid. You can hire the kid in your business. You might even be able to take the child support that Gotham gives you as a contribution for you to grow your business. And then you can hire the kids in the business. There's a lot of cool things you can do. So if you want to do that, if you don't have any kids, number one, keep practicing. Number two, hit Gotham up, 250 for one low price. It's a great deal. It's a really good deal. I've never participated, but I've heard tremendous things. All 5 stars. All 5-star reviews of Gotham Dark Knight. Child support, tax savings. That's a pretty good combo. Almost as good as Sarah's DV combo, but not unless he gets behind on payments. America 250 for one. Let's go. So we're going to pin it, ladies and gentlemen. If you want to hit up Gotham and take him up on the offer, just slide in his DMs. He's there. He's so generous. What a nice guy. What a nice guy. All right. So let's get focused. Let's refocus on tax savings. If you're an employee, type E in the chat. If you're a business owner, type B in the chat. I'm going to walk you through tax savings, and I'm going to give you a strategy right now that everybody can utilize. And I'm going to give you 2 or 3 different examples of doing this. Let's go. What is going on with the Huff and Puff over there? Will Stay down? Oh my gosh. Business owner and employee, easy cheese, baby. Easy cheese. Okay, so let's take an example. I'm going to take Ray, because he's a maniac, he's maniacal, and then we're going to give you different examples. So this is Ray's W-2 employee income. In 2023, he made about this. In 2024, he made about this. In 2025, his income ballooned, popped off. He landed a big government contract for his employer. They rewarded him with a giant bonus. Because he got a big bonus, a majority of his income was taxed at a much higher rate. Much, much higher. Then in 2026, he expects his income to return to normal levels. So let's say this pencil, my big pencil, I've got big pencil and I cannot lie. My big pencil, let's say that line represents 37%. So everything above that line, he's getting taxed at a 37% rate. So every $1,000 above that line, he gives Uncle Sam $370. Every $10,000 above that line, he gives Uncle Sam $3,700 in taxes. Every $100,000 above that line, he cuts a check for $37,000 to Uncle Sam. In what year, let me know in the comments, 23, 24, 25, or 26, in what year is Ray getting destroyed in taxes? Should we focus on it? Let me know in the chat. What year? Type 23, 24, 25, or 26. In what year should Ray be like, man, I need to focus on tax savings this year? Because it's going to be a painful year if he doesn't. Type 23, 24, 25, or 26. What year? Where's the big tax hit going to be? Anything above the pencil is taxed at a 37% rate. 25. Because he's having so much income in this year, he needs to figure out something he can do to pull this number down so he lowers his taxes, saves on the money. So what can Ray do? He's just an employee. And employees don't have a lot of tax savings. It's tough out there, man. So Ray and I jump on a call. He calls me. He's like, hey, man, I see you talk about the tax savings stuff all the time. I need some help. I go, let's jump on a call. Let's do it. And I've got free tax savings calls, by the way. I don't know if there's any more available. If you want to save your spot, just tap on this guy. There's a little orange button somewhere down here. When you tap on that, it'll pop up. And then just scroll a little bit. It'll say tax savings call. I don't have unlimited capacity. If you need tax savings help, I own a CPA tax firm. We help people all the time. Cool? All right. So then Ray says, what can I do? And I say, do you want to buy assets? He goes, good afternoon, good sir. Good morning. He goes, I go, you want to buy assets? He goes, yeah. I go, what kind of assets are you interested in? He goes, I'm really interested in Airbnbs. And boy, oh boy, was he right. I had no idea. I was like, yes, what everybody says. He goes, no, I'm serious. I go, okay, we'll see. Well, he was serious. So then Ray goes out there and he buys his first Airbnb. When you buy assets, you unlock tax savings. When you buy assets, you unlock tax savings. When you buy assets, you can't subtract the dirt, but you can subtract the improvements. So the building, there's certain things you can subtract from your taxes. What? The electrical wiring, the light fixtures, the HVAC system, sprinklers, all that stuff, you can add up the value of that and subtract it from your taxes. So that's what Ray did. Ray's in my passive income club, which is my private group. I've got over 450 members all around the world. We're all learning how to find, evaluate, and buy assets that produce profit. Good morning, Jimmy the Fish. Good morning. So Ray posted in the group. We've got a community aspect of the group so that you can connect and network with other people. You can see what they're doing. A lot of times you just need to be in an environment where you can talk about the things that you're thinking about. So Ray posted in the group. 20 days in the Passive Income Club, and he found the courage. How many of you need a little bit of courage to buy assets? Type C in the chat. You're like, man, I really want to do this, but I'm scared, I'm nervous, I'm overwhelmed, I'm uncertain. What if I make a mistake? Type C in the chat for courage. So Ray goes out there and he did it. He found the courage. He made an offer on this Airbnb. They accepted. He bought an Airbnb. Courage. Welcome to the club. Welcome. Courage. Just so you know, that's normal. Welcome to being a human. I've got these emotions. I'm scared. I'm worried. What if I make a mistake? Cool. Come hang out with us. So he buys the asset. We do something called a cost segregation. He is amazing. We're going to add up all the things we can subtract legally from his taxes in the first year, and we're going to separate it from the things we cannot subtract from his taxes in the first year. Because he's got a big tax bill. Remember, 2025, he's got a huge tax bill. So he buys an asset and accelerates the savings so he can pull down the tax bill for that year. So when he does all of that, we add up the electrical systems. There's a value to that we can subtract from the taxes. There's an HVAC system. There's a value to that we can subtract from the taxes. There's a fire protection and alarm system. We can add that up and subtract it from the taxes. Plumbing system, so on and so forth. When we get back, when the CPA team gets back to him and they give him a number, this is the number that he can, if he chooses to, add up and accelerate into the first year of his taxes. So he's got a $126,000 deduction. Let me show you what this means. Come over here. So let's say, hypothetically, Ray's income as an employee is, let's say, $126,000. So let's say that Ray's W-2 income is a positive 126. So this represents income. So this is what Ray earned, hypothetically. But then he buys an asset and he accelerates it. So then he gets a deduction of negative 126. In the chat, let me know. What is 126 minus 126? 126 minus 126 equals, good morning, equals what? Let me know in the comments. Whatever that answer is going to represent his taxable income. This is the number that can be taxed. White Pharaoh, good morning. 0. Everybody type 0. I want you to understand why, so type 0. Good morning. If you're new here, my name is Will. I go live all the time. We learn how to buy assets that cash flow. If you want to hang out with us every day, just tap on the follow button. I go live, and I teach for free all the time. Type 0. Everybody, is my mic working? Everybody type 0 in the chat. This is valuable. This is important. I need you to remember and retain this information. This information is not for me. This information is for you. If you learn how to retain the information, you will remember. You remember and you implement and you do, you save. We need to save. 0! Let's go. Let's go. I don't know where that accent came from. I'm sorry. So your taxable income, you take your income, you subtract your deductions. I'll show you the tax forms in a second. That takes your taxable income. In this example, Ray's taxable income went to 0. You have to do the whole class in that accent. So let's say that Ray's taxable income was 20%. $126,000 times 20% means Ray's tax bill would have been like $25,000. But instead, Ray has no taxable income. He maximized his deductions. 20% times 0 in taxable income means there's nothing left to tax. So Ray saves $25,000. Oh! That came from buying assets. So if you're an employee and you buy assets, you accelerate the depreciation on your asset, there's nothing left to tax. So Ray now has $25,000 in tax savings. He can then take that money and go do whatever. Wants to buy more assets? Cool. Wants to invest? Cool. Wants to, tax savings is permanent. Oh, that's one angle to do it. Let's do another example. You want to do one more example? Yes or no? Type Y for yes, type in for no. If you're new here, I got to switch the camera. If you're new here, my name is Will. We go live all the time. Right now we're learning how to lower our taxes. You want to do one more example. Type Y for yes, type in for no. Yes, please. If you want to hang out with us every day, just come up here and tap on the follow button. This will be our last example. I'll give you one more. I can't say no to you. Come on now. If you didn't get a chance to register and you want to be in our free, or do a free tax savings call, I don't know if I have any more capacity. But if you need tax savings help, if you're an employee that's overtaxed, if you're a business owner, you want to maximize tax savings, there's a lot of things that you can do. That's what I specialize in. I own a CPA tax firm. I'm in all 50 states. If you need help with that, I set up free tax savings estimate calls. On these calls for free, we'll estimate tax savings. I'll show you some of the stuff that we do for our CPA clients. And if it's something you want to implement, I'll show you how to do it. If you want to hang out with us, come down here and tippy tap tap on this. That's how you book your free tax call. Over here, it looks like this. Just come up here, tap, boop. When that bad boy pops up, it's just scroll a little bit. You see how you got to do that? And it says tax savings estimate call. Bam. So for free, but I don't have unlimited capacity. Every now and then it sells out and then people get upset. Not upset, but Mandy last week was like, I can't get in. I know Mandy, but we found another solution for Mandy. We got her squared away. All right, let's go look at another deal. Let's do another one. Let me show you this. Let's go this way. Yeah, dude, I need to get a haircut. I know. You have to tell me twice. Even though I think you had to tell me twice. All right, let's take a look at, let's do this one. We haven't done this one in a while. This is a good one. Is that where you've been? I've been right here. I've been right here. What are you talking about? I've been right here. All right, so let's take a look at this. This is a laundromat. How many of you are interested in laundromats? Kristen, are you still here? Let me cut it, bro. Jonathan, where you at? You can cut it. Where you at? I'm going to go today. Just bought one. Kristen, check this out. All right, watch this. So let's say you go out there and you buy a laundromat. Kristen, we're talking today. I can't wait. I can't wait. Let's say I go out there and I find this laundromat. There's a laundromat for sale. Looks like this. This is in Harris County, Texas. I bought a zombie mat. Let's go. I think Kristen's near Harris County. So let's say I go out there. Asking price is $350,000. 350 grand. Cool. Now that's the asking price. Remember, principle number one, before we buy assets for tax savings reasons, we need to make sure that it produces profit. Everybody type P in the chat for profit. If it doesn't produce profit, I'm not interested. Mine's in Stafford, outside of Houston. Southwest, right? That's what I'm talking about. If it doesn't produce profit, I'm not buying it. I'm not in it. That's the reason we buy assets. It's got to produce profit. Cool. So the asking price is $350,000. The revenue, the income currently in this asset is $180,000. Awesome. Then I subtract expenses for running the asset. My profit is $63,000. Awesome. 63 grand in profit if I buy this asset. There's one other thing, and I want you to pay attention to this. My FFE is $231,000. Everybody type FFE in the chat. What is FFE? Type it in the comments. FFE. It's an accounting term, and it's a tax deduction. FFE. FFE. There's Jason. Furniture, fixture, and equipment. When you buy an asset, you can add up all the furniture, all businesses, you can add up all the furniture, all the fixtures, and all the equipment. Furnitures, fixture, equipment. Furniture, fixture, equipment. And you've got two options. You can take that as a deduction over time, a little bit every single year, or if you choose to, you can accelerate it and take it all in the first year. So FFE on a laundromat, furniture, fixture, and equipment. What's the equipment? Washers and dryers. Washers and dryers, brand new, can be between $7,000 and $17,000 or more in laundromats. So obviously, if I buy the asset, there's an economic value to the laundry, the washers and dryers there. So if I add it all up on this asset, it's $231,000. What does all that mean? Well, come over here. Let me show you. What all that means is, let's say hypothetically, in this situation, you've got income from your job or from your business. You ready? And let's say that your income, hypothetically, is $231,000. But then you buy a laundromat, and that laundromat has a deduction year one, if you choose to, you can accelerate it, of $231,000. What's my taxable income? What? So let's say you have a full-time job or a business. You $231,000 in W-2 income. You buy the asset, fully accelerated, $231,000. My taxable income is zero. If I was at a 20% tax rate, 20% times 231 is a $46,000 tax bill. Because I accelerated my depreciation into year one, I don't have that tax bill, and I have an extra $46,000. Oh! Kristen, on your new laundromat, would an extra $46,000 in tax savings help you to get that laundromat to where you want to go? Yes or no? Everybody else in the chat, what would you do with an extra $46,000 in tax savings? Oh! Tax strategy, when used properly, allows you to get assets faster. Instead of sending it to Uncle Sam, you legally get to keep it, and then you use that money to buy assets. That's the name of the game. If you're new here, good morning. If you didn't get a chance to book a free tax savings call and you want to do that, I would go do it now. This is your last call. To do it, just tap on this guy. It's down in the bottom corner. When it pops up, just scroll a little bit. At the bottom, it says tax savings estimate call. Go save your spot now. We're going to move on. We're going to be done with tax savings. I've got more stuff up my sleeve, but I don't want to bore everybody. Good morning, Rachel. Good morning, Sunshine. Rachel, where you been? Oh my gosh. Rachel, you got to be on time and every day. Oh my gosh. What about raw land? From a tax saving standpoint, you can't deduct it. There's nothing, you can't deduct dirt, but you can have improvements. Asleep, Rachel. Okay, all right. Sometimes you gotta get some sleep. I hear you. All right, let's go do this. You want to do one more asset? You want to evaluate one more deal before we get out of here? Before we adios vamonos? One more deal. One more deal. You want to do one more? Yes? One more deal. One more deal. All right. We'll do one more deal. Let's do this one. One more deal. D. Wow, Renee. Wow. The enthusiasm. Wow. All right. Let's do one more deal. Let's do real estate. How many of you want to buy real estate, but the interest rates are too high right now? Type R in the chat for real estate if y'all want to talk about that. You want to buy real estate, but the interest rates are too high. What can I do? What are some of the possible options for me? D for Renee. Gotham. No. Gotham. Down, Gotham. Down. Amanda. Amanda loves her some land. Amanda, do you have land now or are you looking to buy it? Jesse, real estate, even though interest rates are high. Okay, let's go through some examples. And then I'll show you how to find this. I know what to do. Jason knows what to do. Let's go. Now check this out. I want to buy real estate, but the interest rates are too high. Let's walk through an example on some of the stuff that you can do. So this is one example on a deal that we did. This is a 3-unit complex. Got a dip. See you later, Kristen. Take care. This is a 3-unit complex. So it's got residential, commercial. So I call him up and I say, hey, Mr. Guy selling his property. I see you have a 3-unit complex for sale. What is your income? He says, I'm making $6,000 a month in income. Everybody type 6 right now. 6 in the chat. It's going to be relevant in just a minute. Type 6. He's making $6,000 in income. I've got land. Okay, there's some cool stuff we could do with it. Where are you at, Amanda? LVN, is that a nurse type thing? $6,000. 6. I either want to do a rental house or Airbnb. Let's go. Oh, baby, did we just get rich? Let's go, Texas. Okay, Amanda. So I call them up. They say they're making $6,000 a month in income. I say, baby, let's go. Oh, I'm going to buy it. They're making $6,000 a month in income. That's $72,000 a year for my math nerds. Oh, I call my bank. I say, get the Brinks truck ready. I got a good one. But wait. Bank says, did you verify income? I go, oh, yeah. I need to verify the income. They told me verbally they're making $6,000 in income, but I can't take verbal and deposit it at the bank. So I say, oh yeah, hey, you say you're making $6,000 a month in income, but I need you to verify. Can you send me, what would I ask them? Let me know in the comments. What would I ask them to send me to verify they're making $6,000 a month in income? Hey, can you send me this document and that document and this document and that document? Kevin the credit guy, bank statements? Absolutely. What else? What are some other ideas? Financials? Maybe they've got bookkeeping, their profit loss statement. Can we do Airbnb in a good location in Florida? For sure. I've got one, Fritz. So I would ask for lease agreements, bank statements, rent roll, profit loss statement, maybe their balance sheet on their QuickBooks, some of that stuff. I want to see what's going on in the business. But the true litmus test is what Jason's talking about, which is the taxes. The taxes. The tax return means that you really made the money. If you're not willing to pay tax on the money, you probably didn't make it. And you realize this when you start evaluating a lot of deals. For example, we're looking at, Dennis, good morning. We were looking at a country club in Iowa. They reported to us verbally they did $100,000 in cash. I said, okay, cool. Can you show me your bank statements? They go, oh, really? Can I see your tax returns? Well, okay, so you didn't pay tax on that $100,000 in cash that you made, but you want me to pay you for the cash that I can't verify? Now listen, I'm not going to report you to Uncle Sam. It's me and you versus the government, not me and the government versus you. That's cool if you're doing some tax fraud thing. That's none of my business. I made my own business and I mind it. That ain't none of my business. However, if you can't verify the income, I'm not paying for it. So therefore, tax return is the ultimate litmus test. But I verify they're making $6,000 a month in income and I'm ready to buy this bad boy. I'm buckled up, buttercup. I call my lender. My lender says, we're going to give you 6.5%. I say, let's go. I get approved, ready to rock and roll. Go make my offer. Before I do that, I find out my mortgage payment is $6,100. Good morning, $6,130. I'm bringing in $6,000. If I buy this asset, I'm bringing in $6,000 a month. But my mortgage payment is $6,130. What's the problem there? V for verify. Chihuahua. What's the problem? I'm bringing in $6,000 in income. My mortgage is $6,130. What the problem is? Good morning, Casey. Good morning, sunshine. What the problem is? $6,000 in income. Mortgage $6,130. Let me know in the chat. You're no cash flow. You're losing money. No profit. I can't buy the deal. The main contributor, the reason I can't buy the deal is the interest rate. So what do we do in situations like this? When the interest rate is too high, everybody tells you don't buy. We don't listen to those people. Broke people give you advice. You'll end up like them if you take the advice. So here's what we can do. That's a non-profit organization. I don't run one of them. So let's go down here. Look at the blue text. Ojos azul. Assumable FHA mortgage. Assumable FHA assumable mortgage? Okay, now let's break this down. What that means is an assumable mortgage is the type of loan that we call up their loan company. They're trying to sell it. I'm trying to buy it. I say, hey, can we call your loan company? They go, yeah. Hey, loan company, do they have the type of mortgage that instead of me going to get my own mortgage, I can just take over theirs? Mortgage company says, please hold. Hey, as a matter of fact, they do. What's up, Mark? Good morning. As a matter of fact, they do have the type of mortgage that you can just take over. I go, that's great. What is their interest rate? They said their interest rate is 3.5%. Oh, okay. Mark's a grown man, by the way. 3.5%. So if I take over their mortgage, I don't pay 6.5% at fair market value. I take over their 3.5% rate. Oh, what? How does that affect my payments? My income from this asset is $6,000 a month. The mortgage, if I take it over, is $4,814. I take an asset that previously was losing $130 a month, and I turn it into an asset that's making $1,186 a month. Oh, what? Same asset, same economic environment, and I found a way to turn it into profit. Not a little profit, big profit. $1,300 swing every month. Just came in. How do you find these on Zillow? How many of you want to learn how to find deals like this? Just say me in the chat. How many of you want to learn how to find deals? How do I find deals when interest rates are high that I can just take over their mortgages? That I can take over their rates? Me. Okay, I'm going to show you how to do that. It doesn't have to be under the business loan. It depends on the financing. There's a lot of different things. I'm going to get into that now. I'm going to show you step by step how we do it. If you didn't get a chance to register and you want to be in our free class, Saturday, August 8th, this is your last call. It's not this Saturday, it's next Saturday. To register for that class, tap on this guy. When this pops up, it'll say class, register, Saturday, August 8th, 9 a.m. Central Time. If you want to be there, tap on this. The class is free. We're going to learn a lot about that Saturday class, as well as other assets, from foreclosures to real estate to self-storage to laundromats, a lot. If you want to be there, tap on this guy, it pops up. 3 things. How do I find assets? How do I evaluate them to make sure they produce profit? And number 3, how do I take fake money and buy fake AI-generated assets? So on your side, it looks something like this. Tap on this guy. Boop. When that pops up, it says it says class, how to get assets. You see it right here? So that's how you register. One more time. Boop. Class. Scroll a little bit, it says it right there. Once you get registered, come in the comments and say done. Say done in the chat, and I know we're ready to rock and roll. Let me show you how we find these deals live right now. You ready? Specials are the bonus. You know it. You know it, baby. How do I find these deals? Okay. I'm not going to go through all of this. We went through done. Let's go. I'll see you Saturday, August 8th. Not this Saturday, next Saturday. The class is free. It's limited capacity. I think I've only have 200 spots in my Zoom room. So make sure that you register. And then on the next screen after you register, you fill that in on Zoom so you get the registration information sent to you. And you can add it to your calendar. You won't miss it. And that reserves your spot. Okay, so These are deals that we've done, 4.0% interest, 2.68, 3.3, all that stuff. Here's how you find them. This is not rocket surgery. You go to Zillow. You might have to log in. Where's my girl at? My birthday is August 7th. Let's go! Amanda, I will shout you out. Let's go, Amanda. I love it. Where's my girl at? Nellie. Nellie says, I'm trying to find these, but I can't find them. I'm trying to find them, but I can't find them. So let me show you how you find them. By the way, if you're new here, make sure you tap on the follow button. I go live all the time. You too, Amanda. Make sure you tap on the follow button somewhere up here. I go live all the time. Done. So you go to Zillow. You might have to log in to do this, but there's a more button. More. Everybody type M in the chat for more. More button. So you go to Zillow. You tap the more button. When you tap the more button, you're going to scroll all the way down. All the way down. When you get to the bottom, it's going to say keywords. Assumable. Transferable. Owner finance. Seller financing. You're going to play around with different keywords. More, Rachel. You're going to play around with different keywords to see what pops up. So how do you get there? You tap on more. You might have to log into Zillow to do this, but it's free. It doesn't cost you any money. So you might have to log in to get there. Nellie, do you hear me? Nellie came in here and said, I tried to find it. I couldn't find it. You probably need to log into Zillow to get to the More tab. You get to the More tab, scroll to the bottom, assumable. You can also pair this with days on market. We've had a lot of success with this. 90 days on market. It's been on the market. They're trying to sell it. They can't sell it. So now they're getting itchy. They'll be more open to stuff like this. 90 days on market, seller financing, owner financing. Here's the results. It searches the listing in your area or whatever area you're looking in. Owner financing, dueño a dueño, owner to owner. Seller financing for 20 or 25 years. Look at this one. Actual live listing. 4% assumable loan. Can you read this? 4% assumable loan. That's right, 4%. Here's the listing. Big pencil. Big listing. Oh, next. 2.875% assumable loan. Big pencil. Big listing. Tippy tap. Assumable 2.25% VA loan. I didn't log in. Nellie, try logging in and let me know. I got you. You and your puppy. So this says VA loan. Pop quiz. So a VA loan is a veteran's loan. Veterans Administration. Do you? Yes or no? Y for yes, in for no in the chat. Do you have to be a veteran to take over a VA loan? Amanda, I got you. Happy early birthday. Do you have to be a veteran to take over a VA loan? Y for yes, in for no. What do you think? Y for yes. Answer? Another daily double. No. You do not have to be a veteran. But if you are a veteran, if you happen to be a veteran, you would sign a document that would release, there's one extra page that you sign and you release the other veterans' VA benefits back to them. Cool? So you don't have to be a veteran. Happy birthday to your daughter in Missouri. Let's go! Let's go! Dude, I went down the diesel engine rabbit hole this weekend. Anyway, here we go. You don't have to be a VA. You can take over this loan. Don't even have to be a vet. That's awesome. This is Sarah's house. She drinks her coffee on this couch. She overlooks the sunrise every morning while she drinks her coffee over the hill country. It says assumable financing available, 2.25%. What? Actual listing right there. Big pencil, big listing. This is how you find them. One more time. Let's go back on track like chiroprac. You go to the Zillers. You go to more. You might have to log in, Nellie. Damn, Sarah. Good morning, Kenny Big Snacks. Tap on more. When you tap on more, you go to the bottom. Scroll, 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 scroll. Keywords, assumable. Also pair this with days on market. I want that home so pretty. Let's go. Then you come down here, 90 days, seller financing, search. Owner financing, seller financing, 4% assumable loan, over and over and over again. That's how you do it. So if you didn't get a chance, I'm going to peace and grease. If you didn't get a chance to register, we've got a free class I'm hosting Saturday, August 8th. If you want to be there, go register now. We're ending the TikTok live. Tap on the orange bubble. When the orange bubble pops up, you see where it says class, how to get assets. That's how you would register. One more time. Good morning, M Cubed. What up, baby? Tap on the orange button. When it pops up, it says class, how to get assets. Just go register there for free. Once you get registered on the very last screen, that's where you add the Zoom information to your calendar. Name, email, all that stuff. You might have to do it twice, but that's how you get it to your calendar, delivered to you. Cool? All right, we're gonna peace out. I'm gonna get a haircut. What is going on with this thing? What is the Jimmy Neutron action? I dig it. I kind of dig it. Come on now. No, you're gonna peace and get a haircut. Come on, man. Okay, bonus points. DM me pictures of the type of haircuts I should get. Should we do that live right now? What kind of haircut should we get? Let's go. This will give you a chance to go get registered. Let's go to the internets. Should we do, hold on, I found one. My son, 90s bangs haircut. Y'all remember this? Hold on. I need to show y'all this. No. Buzz. They did the buzz cut. Hold on. Yes. Bruh. Y'all see this? Hold on. Stand by. This is what we should get. A fade. Hold on. No. Y'all see this one? This is what I'm thinking about. What do y'all think about this? So, shave, buzz, everything except the bangs. Bangs up front. Then you get them blonde tips. What do y'all think? Yes? That's what I'm talking about. Y'all remember that? Hold on, we got more. Okay, what about this? Hold on. Okay. Shave everything, leave it long in the back. Yes? How many of us vote for this? Are we fans of this? Dog. I don't even know what to call this. Shave everything, and you just let it flow. Yes? No? Lord have mercy. You said get a haircut. Hold on. We got to get some more. Let's go images. Okay, look at okay, I think this guy's on Jerry Springer. Bruh. Hold on. Okay, those are good ones too. So I think this guy's on Jerry Springer. That's good news for us. Buzz cut in the back. So from like here down, back, everything's buzz cut. Leave the bangs. We like this? Yes or no? Double dog dare you. I can't. Now he double dog dared me. I can't. I'll pay you to get that one. Bangs up front. Yes? Dog. So good. What is this? Oh. Okay, last one. Last option. I don't know why it's acting up like this. Nope. Boop. Can y'all see this one? Oh, you can't really see it. How do I get... Oh, there we go. Okay. Once again, buzz cut, bangs up front, but you braid them and you get them like green or yellow. Business in the front, party in the back. Now, if that doesn't scream, let's do business, I don't know what does. The snakes. Let's go. The Medusa oblongata. That's a hell no. Okay, anyway, we'll think about it. If you didn't get a chance to register for the class, Fulio, let's go. Go get registered. The class is Saturday, August 8th. It's free. How do I find assets that produce profit? I'm going to teach you. You'd be brave. Let's go. Dude, I would be blocked by a lot of you. Get the meme all cut. All right, I got to go. So go get registered for the class. If you didn't register and you want to learn how to buy assets, the class is free. There's only 200 people allowed in. It's capped at that, so go get registered. I'll catch you on the flip. We'll see you. We're going to peace. We're going to grease. Adios. I'll catch you on the flip. Bye-bye.